She's on mute.
Yeah, I'm here. I'm here. I couldn't hear you guys before.
My apologies. Thank you, trustee Chandra.
Present.
Trustee Keller.
Here.
Trustee Linder.
Present.
Thank you. Trustee Abasti. And our newest trustee, trustee Abbott.
Here.
Thank you. And
Oh.
the chair is here.
And before we proceed, I want to make sure that the traditional Brown Act questions have been asked of the two trustees appearing.
Mhm.
So trustee Jennings, have you posted the agenda on your door?
Yes,
And is your location where you're teleconferencing in ADA accessible and open to the public?
yes,
Thank you. And trustee Linder, same questions. Have you posted the agenda on your door?
Yes, I have.
And is the location from where you're teleconferencing ADA accessible and open to the public?
Yes, it is.
Thank you.
Thank you.
Okay, thank you. A few ground rules for the meeting. This is a hybrid meeting, so those who are attending virtually, please mute yourself unless you are speaking. And if you wish to speak, please raise your hand and the staff will alert the chair. All votes will be roll call votes. We have orders of the day. We have a time certain item at 10 a.m., which is item 5D, a trustee interviews to recommend to the council a public board member. I would also like to swap items. Items 3B and 3C. I think 3C we might be able to get through before the 10 o'clock hour. So we'll hear 3C in front of 3B. And are there any other amendments to the orders of the day? So if there are none, do I have a motion to accept the modified orders of the day?
So move, trustee Chandra.
So we have a motion by trustee Chandra. Do we have a second?
I'll second. Trustee Keller.
Thank you. A second from trustee Keller. Any discussion, any public comments? We'll have a roll call vote. Vice Chair Jennings.
aye,
Trustee Chandra.
Aye.
Trustee Keller.
Aye.
Trustee Linder.
Aye.
Trustee Avasti.
Aye.
Trustee Abbott.
Aye.
And I vote aye as well. Motion passes. Thank you. We need to waive sunshine on item 5D. We had a late attachment, which was the cover memo for 5D. Do we have a motion to waive sunshine?
So moved.
We have a motion from trustee Linder.
I'll second.
We have a second from trustee Kelleher. Any discussion, any comments? Hearing none. Vice Chair Jennings.
aye,
Trustee Chandra.
Aye.
Trustee Kelleher.
Aye.
Trustee Linder.
Aye.
Trustee Avasti.
Aye.
Trustee Abbott.
Aye.
And I vote aye as well. Passes. As we proceed at this time, members of the public may comment on items not included on the agenda, provided that the matter itself is within the subject matter that is under the jurisdiction of this board. Members of the public who wish to provide comment at this time may do so by, quote, raising their hand in the Zoom app, or by joining by telephone by pressing *9 on their telephone, or if they are here present in the room. Please state your name for the record prior to providing your comments. Speakers will be limited to 3 minutes. In addition, public comment on each agenda item will be heard as the agenda item is reviewed. Are there any members of the public wishing to address us? Any members from online? No. Okay, there are none. Great, then we will proceed with the agenda. And the next item is the consent calendar. Do we have a motion to accept and approve the consent calendar?
So motion, trustee Chandra.
We have a motion from trustee Chandra. Do we have a second?
Trustee Keller will second.
We have a second from trustee Kelleher. Any discussion? We will vote. Vice Chair Jennings.
aye,
Trustee Chandra.
Aye.
Trustee Kelleher.
Aye.
Trustee Linder.
Aye.
Trustee Asti.
Aye.
Trustee Abbott.
Aye.
And the chair votes aye. Passes. Next item is agenda item 2, death and survivorship. We will observe a moment of silence for those who. Oh, okay.
Well, you can do two as you.
Okay, we'll do 2 and then we'll get to some other items. We'll have a moment of silence for those who have served the city and who have passed. Thank you. So proceed further in the agenda. We have 2 items of interest today. One is I don't mean to put her on the spot. We have a brand new trustee, Trustee Abbott. So if you wish to give us a few words about yourself, or if not, that's fine as well.
Sure, I'd be glad to
Floor.
turn this on.
I think you just press the button.
All
There you go.
So I am Debbie Abbott, even though it says Deborah, I go by Debbie. So, and I come to you with a background with an MBA in finance, 10 years of doing finance. I did some other work in management and marketing. And I've also been teaching at San Jose State finance for 16 years. So, and I teach in the evening, and last night I just gave finals, so, my students feel a little tortured, but, hopefully being with me won't be a torture, so. I'm really delighted to be here and to look at what we can do together to make sure doing the best thing for the retirees on disability and helping the investments.
Grateful
Recording in progress.
for being willing to serve. And we hope you pass our test.
Exactly.
And speaking of tests, we have another trustee issue of note, and that is Trustee Kelleher is having his last official board meeting today. So as a body, we would like to thank him for his service, his insight, his wisdom, his good humor. And we have a small plaque to present to him. Thank you. In honor of his great service to us. That's very nice. It is. Congratulations. Thank you. Want me to shake your hand?
Yeah, it is truly been a pleasure to serve as a trustee and to get to know all of you. I've learned a lot about fiduciary law.
More than you ever wanted to know.
No, I've always wanted to know a lot there, but yeah, but it's been great working with staff and my fellow trustees. I'd like to thank all of you, so, as well as our consultants. Of course. Thank you.
You will be missed.
Can I just add one thing to Bart's comments, all of which
Absolutely.
I agree with and echo, and Mark is a man of many talents, but I also felt he always served with great empathy, which I always appreciated.
Mhm.
I agree. He wasn't the most verbose of our trustees, but when he did, wisdom and grace. Thank you.
Yeah, on behalf of staff, we just want to, thank you for your engagement and for your work with the boards and for the plans over the last 3 years. Obviously, as you know, this is a challenging job. And, I also want to personally thank you for, we spoke about, you were considering terming out at the end of your term in November, and you were gracious enough to use this application process to allow us to do it sooner. So you will be missed. You should know that in closed session, we discussed whether to give you a plaque or 6 months of lunch to your house. Plaque, right, and the lunches, yes, but we hope that you enjoy the plaque. And again, we do on behalf of the staff and the plan members, you for your support and your engagement and work for the years. Thank you very much.
Well, thank you again. But your service is not yet over. We have the rest of the meeting.
Yeah, I know.
Please leave it on until such time. We do have some important work to do today. And with that, we come to agenda item 3, which is an oral update from our CIO. Who does not seem to be present.
No, he's actually He's in Hawaii and
Aloha.
he said, I don't have anything to do in Hawaii, so I'm gonna get up at 5:30 and be at that meeting. And so we appreciate that, CIO Palani, welcome.
Of course, aloha. Hope you can hear me.
Mhm.
The palm
Yes.
trees.
I'd much rather be in the beautiful ORS building on the 5th floor, but I'm kind of stuck in the Big Island.
Malani.
Stuck? You're stuck?
I'm stuck in the Big Island. Well, firstly, I want to thank Mark for his services. Just like everyone else, I echo their comments. It's been a pleasure working with Mark for the last few years. We'll truly miss him as a trustee, and not just as a board member. He was also an IC member and various other committees. So thank you, Mark. And so we have two agenda items this morning: asset allocation and the pacing plan, both of which have been extensively discussed at the IC. I don't think we need to have an extensive discussion here this morning, but we're certainly open to taking questions and discussing it as much as you want. But before I hand this over to Laura and Dinesh, here are some performance numbers. Again, these are unaudited estimates. As of May 16th, fiscal year to date, the plan was up 4.3% and the healthcare trust was up 4.9%. Again, these are very preliminary numbers, rough estimates. With that, I'm going to turn this over. Mr. Chairman, did you say that you wanted to switch agenda items?
Yes, I thought we would get through the pacing plan more quickly, and that way, it would be a better lead into our 10 o'clock, time fixed item. So if we could do the pacing plan first. Item
Certainly.
3C.
Well, we can do that. So for that, I am going to invite Dinesh.
Great, thank you, Dinesh.
Thank you. Let me go ahead and share my screen. All right, so I have the pacing plan for fiscal year 2023 to 24 here that I'm going to present. As Prabhu mentioned, it was already approved by the investment committee, so I'll run through it a little bit more quickly. So the reason that we do a pacing plan on an annual basis is that for private investments, we don't control the timing of the cash flows in and out of those investments. So the managers have discretion to make particular investments, and as they realize or sell those investments, return the capital back to us. So we have a pacing plan that uses assumptions about the timing of those cash flows in and out of those investments, as well as the expected returns of those investments to produce this output that shows us how we can get to and maintain the target asset allocations. This document has two different outputs. So one is based on a 3% venture capital target allocation. One is based on a 4% venture allocation. So those are the two different options within private markets that are being considered in the 4 asset allocation mixes in the next item. So we'll be presenting both of those. So getting into the actual results and what we've done over the current fiscal year, we're expecting to make 15 commitments in the year that's ending in June 30th, just in about 6 weeks, for a total of $133 million. So that is less than the pacing plan, about 89% of it. And I'll show some of the asset classes that we chose to undercommit. 2/3 of those commitments, so 10 out of the 15 were with existing fund manager relationships. We've talked about the maturity of our private markets program, that we have many existing relationships that we continue to expand. The current positioning versus our target, we're at 22.9% for private markets, which is about 1.9% above the 21% target. The changes in asset allocation that are being considered are either to a 20% or 21% target. If you think back to 2018 and 19, the target was higher at 25%. The market environment has changed quite a bit, and there's 3 changes that we made compared to last year. First being the banking crisis that we're all aware of. Second being that valuations have moderated, but do still remain elevated. So you can think of it as going back to 2019 or 2020 level valuations. And the last one is that capital is no longer a commodity. In the past, especially within private markets, there was a lot of capital chasing a limited amount of deals. And it's flipped now that there's less deals, there's less capital as well, both from LPs as well as fund managers that are more reticent to put money out to work. So the capital that is available, including the money that will be approved in this pacing plan,
we plan to be disciplined about the way that we deploy that. This page shows the deployment by each of the asset classes. So I mentioned there were a few that we committed less than expected. First being venture capital. If you look on the far right of that column, 60% of the pacing plan was committed. The other two that were under committed were growth real estate at 84%, private debt at 93%. So in the uncertainty, like for real estate, given the changing capital markets and interest rate impact, we've been disciplined. Same on venture capital, given the tremendous shift in valuations that are taking place. We've been cautious in the deployment of capital. And similarly with private debt, because we were overweight relative to the target, we had the expectation that our future pacing plan would be less than the 30 million that was in the current fiscal year pacing plan. So we made an effort to reduce that slightly. This page shows our actual allocations, the 1.9% overweight. Most of that is coming from the buyout asset class at a 3.9% overweight relative to target, mostly offset by venture capital. This page has a comparison to where we expect to be as of June 30th of this year compared to last year's pacing plan forecast. So we're actually 4% higher than where we had expected to be. There's a few reasons for this. The main one being the denominator effect, where public assets have declined in value much faster than private assets. So the plan assets are lower than private assets have declined. We've also seen an acceleration of capital calls as new investments are being made faster than money is being returned to us as there's fewer sales. This page shows plan level net asset forecast for the next 10 years. It's the foundation of the pacing plan. So it uses the current values, layering in the expected return of the plan, as well as actuarial information based on capital flows in and out of the plan. So contributions from employees, the employer, as well as benefit payments. And what you'll see is that the upcoming 5 years are slightly below what we had forecast last year because of the lower starting point. However, the back half of those 5 years, 2028 to 32, are slightly higher. I mentioned that there's two outputs that we're going to show today, and I guess the approval by the board will be contingent on the next item and which asset allocation mix gets approved. But first, I'll show the 3% venture capital target. So this would be lower than the 4% that it is today. The key difference is, so to back up, so the modeling was done by our consultants, Neuberger Berman for the buyout asset class and Nikita Investment Group for the other 4 private asset classes. The results compared to last year, venture capital would be 10 million lower than the current fiscal year. Private debt would be 10 million lower. Private real assets would be 7 million lower. Real estate and buyout would remain the same. This page has a visualization of that 3% target. So currently we're above target. And the way to read this is that the dark bars are the actual expected exposures for each of the next 10 years for each of the 5 different private asset classes. And the lighter shaded bars are where we would need to be exactly at target over that time. So you'll see that over time we get closer and closer for each of the 5 asset classes in this scenario. So the second option is based on a 4% venture capital target, and compared to the 3% target, the only difference is that venture capital would be 2 million lower than the current pacing plan instead of 10 million lower. So that's the difference. And looking at it visually here, again, similarly looking towards the target over time. And this is a combination of art and science, so it won't be exactly like this, but this is our best estimate of how we can get to and maintain targets. So I'll take questions, and I think we do need action on this item. So it would be either this page with page 8, which has the 3% venture capital target highlighted, or page 9 if a 4% venture capital target is approved by the board in the next asset allocation item.
Great, thank you.
Just so that I'm sure what's going to determine that is going to be the asset allocation decision.
Correct.
So what action are you actually asking?
Depending on which asset allocation mix the board takes or approves in the
So
next.
you're asking for some sort of a motion that takes into consideration whatever the asset allocation is. So
Right,
you're not asking the
contingent on
board to actually select the size of it right now. That would be depending on the asset allocation discussion.
Correct.
Okay. I just want to make sure that the board is clear on that.
Okay. Thank you.
So I have a question.
Sure.
You mentioned that the value of assets have been down. Has that impacted the value of the assets that we currently have and the assets that we may be looking to invest in for the venture capital fund?
I think it does have some impact. I think not to the full extent of a drop to the level of public equities, for example. But there is a decline in for new investments that are being made at lower valuations. So I think that's where it's most evident that we're able to buy at lower valuations. The existing investments in many cases are actually performing well. There are exceptions to that, but for the most part, they're on plan. And for private investments, they were generally bought at valuations less than public markets. So they don't necessarily need to be marked down to the same extent as public markets.
Are we going to see markdowns coming as we look at closing out the year?
We have seen markdowns, and I think the area that we probably would expect to see more going forward are both venture capital as well as real estate. So those happen to be the two that we committed less than the plan. So those are the areas I think have the greatest expected impact.
And I have a question with regard to sort of the overall mix, but when we're looking at venture capital, when you think about the projected returns, is that taking into consideration the expenses that we pay? So this is our projected returns afterwards?
Yes.
Okay.
It's probably worth pointing out that all of the private market valuations are lagged by like 2 quarters versus public markets. So
Yeah.
when we're talking about markdowns that may come, they may come because we're looking backward a bit
Yeah.
here, right? Than what we're seeing in the public markets.
And just because I'm based in San Francisco, and you mentioned real estate. What, real estate exposures do we have? What are we investing in? Is it pretty broadly diversified, or is it all downtown office in San Francisco?
Unfortunately, very little of that. Office overall is the smallest of the 4 primary asset classes within real estate, primary sectors. So I would say maybe 15% of the growth real estate allocation is to office. We did an update at the investment committee in December, and we showed actually in the last 3 years, only 3% of our real estate investments have been in office buildings the last 3 years. So very limited near-term exposure of what type of investments that we've selected, as well as what our managers have been investing in. So it's been a tough asset class. Even before the pandemic, it was a very capital intensive asset class that required a lot of tenant improvement costs, maintenance, and yeah, was less attractive than other things which we focused on, such as industrial warehouses, self-storage, apartments.
Fantastic, thank you.
Sure.
Yeah, maybe as a future item, we can have just look at real estate and look at the breakdown by real estate type. Because I think downtown office is certainly an area of concern.
Yes.
Across the board, but especially in San Francisco. Okay. Any other trustee questions? Trustee Chandra, looks like you were ready on the trigger.
And no, I was just gonna, San Francisco may be the least of the metro. New York is worse and LA is also doing pretty bad.
Yes.
26 Empire State Buildings worth of empty office space in Manhattan. And Brookside, I always get their name wrong, have given the keys back to their commercial lenders and 2 properties in Los Angeles.
I guess a similar question is, do we have private debt exposure to downtown real estate?
Right.
Within the private debt allocation, no, we have very limited real estate exposure. So I don't think there's any or an immaterial.
Anyway,
If I may, Mr. Chair.
you absolutely may.
Thank you, Dinesh. I'm intrigued by a bullet point on your slide year in review. It's the last bullet point. It says capital is no longer a commodity. What do you mean by that, and what's its impact on the portfolio and opportunities that we're investing in?
Absolutely. So I think it comes down to the rise in interest rates, the banking crisis, the denominator effect for limited partners, and just the valuation reset that in the past, money was flowing out into the system quite rapidly, particularly for private investments. So there was a lot of dry powder that was looking to find a home and make new investments. And many of those investments were made that probably shouldn't have been made. But it's reversed now where there's less capital that's available, both from limited partners such as ourselves and other institutional investors facing the denominator effect or just uncertainty about the market. And during these periods of time, there's usually less capital that people are willing to invest in those periods because it's scary to be doing that at that time when there is that concern. The other end of the spectrum is both on the general partners that are making those investments. They're also being cautious because they're aware of the risks that they're facing and the market environment is changing. The other items that were mentioned, inflation, interest rates, geopolitical risk, banking issues that make it harder to generate the type of returns that were easier to generate in the past. So the capital that's available today, either from limited partners such as ourselves or the general partners that are making those investments, that capital commands a premium now, whereas in the past, there was so much of it that one particular investment could choose from many different sources of capital, but now it's shifted where the capital can choose to be more selective about investments.
Does that put us in a better negotiating position with general partners in terms of deals that we can cut, fees that we can negotiate? Relative to what it had been in the past.
It should. I think realistically, what we've seen so far is that we've gotten access to funds and investments that normally wouldn't be talking to us. So these are more capacity constrained strategies that are facing their own fundraising issues and now reaching out to groups like us. On fees, I haven't seen a market shift yet or on terms, but I would expect that to come as this fundraising challenge continues. And we've seen other funds that are extending their fundraise periods and perhaps we'll need to make some concessions.
Thank you, Mr. Chair.
Thank you.
I have a question. Sorry, go ahead.
Well, I was wondering what is causing the overweighting of the buyout funds? Is it the valuations are down, so why it's overweighted?
Yeah, so in 2018 to 19, we had a 25% target allocation to private markets. The asset class that had the largest target weight, as well as the lowest actual weight, was buyout, because there were many years that the Federated plan did not make buyout investments. So in 2017, 18, 19, there was a large push into the buyout asset class. So that was the time that we hired Neuberger Berman as our advisor and set up the fund of one. And just the sheer amount of those commitments and the success of how well those have performed has created that overweight that you have today, because the buyout target allocation has been reduced, as well as the outperformance of those earlier investments that were quite large.
I have another question, and it's more general, and it's what I've noticed, and there was an article in the Wall Street Journal about this 2 months ago, saying that many pension funds are moving away from making investments in private markets, particularly private equity. And I'm wondering whether we should be concerned and also moving away from it, or as you think, it may be a greater opportunity.
I could mention just working with we work with 250 clients, many of them are pension funds, and we have not seen a move away from private equity. If anything, folks have seen the value of it, I think, in the diversification when equities go off the bond at the same time in 2022. So there are some funds, particularly endowments and foundations, I would say, that sort of overcommitted to the liquid asset classes. Now the markets went down, they see this their effect and liquidity issues. I wouldn't say that's necessarily the case in pension funds that were already sort of a lower allocation in general.
Yeah, because I know CalPERS is still continuing to invest, but there are some other big state ones that are saying maybe not quite so much right now.
I think so much depends on the liquidity situation of that particular fund, and that's something that we watch closely for how much we can put into the fund.
And we'll actually be getting into that with the next agenda item.
Right.
We're actually gonna be asked. Any other trustee questions? I have a question on slide 4, which is looking at our lagging pacing plan for venture capital. We're at 60% for the 2022-23. So does the 40% not invested, does that simply roll over into our next fiscal year? Or is that spread across 5 years? Or what do we do with the 40% that wasn't invested?
Sure. So the pacing plan modeling that Mikita completed for venture capital takes into account that only 18 million would be invested. And they're making a forward-looking projection based on that level of commitment and how much future commitments need to be made to reach and maintain that target. So it won't be lumped into the future year, but it'll be taken into account that we did less. So based on their updated assumptions of how quickly capital has been invested so far, how much money has come back, which is very, very little or none, and spread that out over many years.
Right, so I understand that our venture capital investments are valued at cost at this point. Is that our initial investment cost, or are they actually valued at something above cost?
There are cases where they are valued above cost for some of the older investments, but for the most part, they are valued conservatively at cost.
Right, any further questions? So we need a motion to accept the pacing plan, understanding the pacing plan is dependent on the asset allocation, which will be set in the next agenda item. So do we have such a motion?
Trustee Kelleher says motions.
We have a motion from trustee Kelleher. Do we have a second?
I'll second it. Trustee Linder.
Okay, I think I heard trustee Avasti first, so we'll take her second. Any discussion, any public comment? Hearing none, we'll vote. Vice Chair Jennings,
Aye.
trustee Chandra.
Aye.
Trustee Kelleher.
Aye.
Trustee Linder,
Aye.
trustee Avasti.
Aye.
Trustee Abbott,
Aye.
and the chair votes aye. Motion passes. Thank you. Okay. So now we go to the next agenda item, which is indeed item 3B, asset allocation.
All right, thank you, Mr. Chairman. Can you hear me?
Yes.
Okay, perfect. So as I mentioned before, we have discussed this not once, but twice at the investment committee. We've had extensive discussions on this item. So I'm actually I've requested Laura to go straight into the sort of the summary page, the decision page. But of course, throughout the process, we're happy to take any and all questions from all of you. So without further ado, over to Laura Whiting.
Noticing that my Zoom, which was logged in, is now logged out. So I don't know, I can log back into Zoom, or if somebody on staff wants to share the presentation, I can do it that way. Right along there.
Yeah, we'll try to share it.
See who gets it done first.
Oh, it's up.
Okay.
Almost. There we go. Almost.
Make sure that mic.
That was
Great. Thank you.
Go ahead, Laura.
Okay, great. Okay. All right, thank you very much.
Just let us know as we need to move to the
Yeah,
pages
yeah,
so that they
okay,
can.
so, as a summary. We have discussed this several times, and Makita also works with the police and fire board as well, so we've been through the same process with the investment committee and the board. But obviously, these are two different funds with different needs. If we go back to sort of the let's see here. I'm not sharing anything, but I can.
Okay, I was going to make you focus.
If we can endeavor to make it a little bit larger on the screen.
It's a disabled participant screen sharing. But if we go. Okay. We have an introduction. So as you all know, asset allocation is a very important decision on the part of the board. All right. And so we go through a process that's a long and collaborative process with your investment staff, where we start out with a lot of different asset allocation options that we look at. We usually use the current asset allocation as a starting point, mainly because there would be a lot of transaction costs to just completely shift on an annual basis. And also, you know, it is an asset allocation in this case that has worked out quite well for you. You all had a quite strong return on both an absolute and relative basis while things were increasing in value prior to 2022, and then had a lot of diversification in your plan, particularly around some of the absolute return hedge funds that were tail risk hedging, a lot of the private markets assets as well, in a market environment like 2022, when we saw more than negative 13% returns for investment grade bonds and around 18 to 20% negative for various equities. So it is an asset allocation that has served you well. As you know, within your investment policy, which is stated on page 3, we do look at this annually. That is something that we might speak with the investment staff and the boards about going forward. I would say it's best practice to really do an in-depth asset allocation every 3 years rather than looking every year. Again, being committed to long-term asset allocation. So Prabhu has asked me to jump into the comparison of asset allocations, given that we have discussed it several times before. So this is what we have pared down all of the available options that we analyzed in the first place to. And so a bit of an eye chart, but if you take a look at the left-hand column, that's the current Federated asset allocation. So we look at a split between growth and then income and diversification. If, for those of you who weren't on the board for the past several years, prior to the pandemic, the board was the asset allocation was quite low risk, had trailed peers for many years. And we work with a lot of boards that say, when markets fall, we're gonna get more risky, and then never actually do because it's scary at the time, when you have a market environment with a major equity market correction. But this board looked at the major equity market correction, and your investment staff did as well in early 2020, sort of height of the pandemic when things initially shut down, and did transfer a significant amount of assets from bonds and from more conservative asset classes into equities at the end of March, early April 2020, which ended up being the best possible timing. So now we are at a growth, income, and diversification split of about 75-25. If you look at the bottom, you can see Nikita's expected returns for 10 and 20 years for each asset allocation. The risk consultant Veris calculates the standard deviation. So we've collected that from them. And in your policy, the risk limit is 12%. That's a guideline, and the board has been comfortable at that 12.1 number. But if you take a look at mixes B and C, they do come in below the 12%. The differences here between the current and mixes A and B are not significant. They would keep growth at 75% in the case of mix A, or 74% in the case of mix B. Mix A shifts 3% from U.S. equity to developed markets, non-U.S. equity. Valuations are a bit more attractive in developed markets, non-U.S. equity. In terms of valuations, they're long-term indicators. Things can be cheap for a reason, but it does appear that non-U.S. equities are more attractive from a price to earnings ratio perspective. We also have had a dollar that's been strong for quite some time, which has been a negative thing for non-U.S. Dollar assets. If that were to shift, having more assets outside the U.S. would be positive. Mix B would also shift that 3% from U.S. equity to non-U.S. equity. It would also move 1% from venture capital to absolute return. Absolute return is hedge funds. The hedge fund portfolio is not generally an alpha-seeking one. It's more of a risk mitigating portfolio, which is what Nikita and your investment staff have a preference for in the hedge fund space. I think you're going to allow managers to go into sort of esoteric asset classes and be very opportunistic. We want them to be doing something that they couldn't do in sort of a low-cost public passive portfolio. Mix C is less aggressive, a lower return. It would shift 1% out of U.S. equity, 2% out of emerging markets, and put those additional assets into investment grade bonds, long-term government bonds and TIPS. So more fixed income in mix C, lower emerging markets, and that would also have the 1% shift out of venture capital. Taking a look at some of the analysis related to this, we do have a peer chart here on page 14. I know you always hear me say this, but take this with a grain of salt because it is self-reported. So while you have a dedicated allocation to emerging markets equity, many of these folks are investing in emerging markets equity, but probably lump it into global equity. So this shows that the peer funds have a median emerging market equity allocation of 3%. That is lower than we typically see for most funds. Alert here. So we have some more mean variance optimization based analysis. As I mentioned, the federated mix in A and B are quite similar from a risk perspective. Mix C, as you'd expect with a lower standard deviation, would have less bad worst case scenario returns, a lower probability of experiencing negative returns, but would also have a lower probability of achieving your target rate of return.
Is that a fire drill?
We probably check, probably an Amber Alert.
Yeah, that's what I think. It's summer alert, but we don't all get it.
We'll all get it.
We also have, we want to look at analysis that doesn't depend on Nikita's expectations for risk and return. So we look at historical scenario analysis as well. We have historical negative scenarios here on page 16. Again, as you'd expect, mix C would protect in most of these market environments, with the exception of, say, a rate spike environment, given that it has more fixed income. Looking at the positive scenarios here, you can see differences. We do see that plummeting dollar scenario on the bottom half of the page. So mixes A and B with more non-US assets would do better in a plummeting dollar scenario. We also look at stress testing on a forward-looking basis, what we think would happen to these portfolios in a rising interest rate environment where credit spreads widen significantly, the dollar changes in value, or US equities decline quite a bit. So you see the negative market environments here on page 18 and positive on page 19. Again, you do see that the dollar dropping scenario being more beneficial to A or B, and you see mix C protecting better in negative market environments, but keeping up less on the upside. One other type of analysis we like to look at, we call economic regime management. We found that really important drivers of returns depend on surprises in the market environment. We might have inflation, but if it's the inflation that everyone expects, it usually doesn't change market prices that much. Whereas if there's a surprise, it does. And so we look at the sensitivity of the different asset allocations that we're considering today to growth, inflation, interest rates, and systemic risk. Systemic risk being like a global financial crisis type environment. So you can see that the current portfolio has the best positive sensitivity to growth and inflation. Mix C would have a better protection in a systemic risk environment. So we have some other slides in the appendix that I'm happy to go over. In summary, we think the current asset allocation has served you really well. We think it's really well diversified. But that said, we think it's reasonable to consider the alternatives for today.
What is the cost of rebalancing?
It's relatively low, given that you have liquid public markets investments, mainly through funds in equities. Rebalancing costs going from US developed markets, non-US would be low. If you do adopt a new asset allocation, your investment staff will come back to you with how they're implementing those changes.
I have a question. There was a study from George Mason University showing that in recessions, they looked at 7 recessions for the past 50 years, that it's better to move towards fixed income and to move out of international equities. So I'm thinking that a mix that does that, which would be mix C, looks a little bit more favorable based on that information. That's it.
Historically, that's definitely been how people get more conservative, at least on the equity to fixed income side. I think, the market environment we have now might be a little bit different, given that, the Fed has raised interest rates so much over the past few years, and many people think that that's going to level off a bit. And also the inflation scenario that we have now is sort of unprecedented. Probably there might have been some recessionary environments. I haven't seen a specific study that were driven by inflation, but we haven't really seen much of that since the 70s. So last year was really unique in the fact that bonds provided no diversification benefit. I think historically they have in most recessions, having more bonds has been positive. We talk a lot at the investment committee level about how yields on bonds are a lot more attractive than they were before. In my 12 years or 15 years working at Nikita, bonds are more attractive than they've been at any point during that. International equity is really difficult to predict returns for, mainly because currency is driven, so it's such a big driver of returns. But generally, when we do have people get spooked about the markets, they tend to move towards US equity and US bonds.
One of the other things I'm wondering is, I know that for the fixed assets, you're looking at 10-year bonds, but would you consider more intermediate bonds? Why the 10 years versus intermediate? Because there is some uncertainty with regard to what's happening with interest rates.
So we look at overall portfolio returns on a 10 and 20-year basis, but the investment grade bonds that you see here are like a Barclays aggregate duration. So that's 5 or 6 years.
Okay. And what about the long-term government bonds?
Long-term government bonds is longer.
They're the 10 years.
Plus 10 years plus, sometimes 20 years plus. Long-term government bonds generally are the only asset class that does well when you have like a big geopolitical risk environment. That wasn't the case when, say, Russia invaded Ukraine and you saw volatility, only because of the interest rate environment.
Right.
The historically long-term government bonds have done well when people are scared of everything else.
Let me just point out that one of the assets is the immunized cash equivalents, so those are just short-term.
Yeah.
Investments. Okay.
And I have another question.
Please.
Which has to do with, we've been talking from a very long-term perspective about what this can return, but what about the short-term needs that the retirement system has to, provide?
That's exactly what,
And that will cover that?
Right, we basically have 5 years worth of payments
Set aside.
in a lockbox, if I can quote Al Gore. And that's the immunized cash flow.
Okay.
So that's another risk mitigation strategy we have. So we don't really need to worry about, what's going to happen next month, next year even.
Because we don't want to be Silicon Valley Bank and have people, the depositors run on us.
And that was exactly.
That's exactly the parallel, but.
Yeah, that was part of the strategy with moving more into risky and equity, like assets and private markets was, let's make sure that is secure.
Any further questions from trustees?
I have actually one more question, and that's absolute return, hedge funds under a low beta thing. I just not familiar with why that would be in a hedge fund investment would be in a low beta kind of a investment. So could you tell me more about what that is?
Yes, good question. It is sort of a unique asset class. So I think historically hedge funds many times were, long short type investments. They were supposed to be alpha generating in upmarket environments. They were supposed to have a crazy return. But Nikita's philosophy that we share with your investment staff is that if you're going to lock up capital for some period of time and pay higher fees than a US equity index fund, for example, make sure that you're really getting a different type of exposure. And so you can see here the market neutral strategies and the individual hedge funds. You can see, for example, D.E. Shaw, that's a global macro fund that can shift between currencies and different, any asset class under the sun, and had a 20.7% return for the 1 year period when we saw a lot of really challenged asset classes. Some of these funds are long volatility, so they're going to do well when the VIX spikes.
Yeah.
Some of them are trend following, so they are going to, as equity markets move down, they're going to benefit from that. So you have here the relative value allocation and these 4 funds, and Jay leads that asset class on your staff and is in contact with them daily if you have any, specific questions about the individual funds. Some of, this is called market neutral strategies here, relative value. A lot of our clients have what they call risk mitigating strategies allocation, where they sometimes have long-term government bonds within that. That's often a hedge against global macro risk, and also have risk mitigating hedge funds as well.
Any other comments or questions?
Yes, it appears that there's been a lot of discussion in the investment committee on this topic. So is there any, perspective on makes a slightly better return, same risk, makes B same return, little bit of less risk. I'm wondering if it's just a forecast error. In
Sure.
decimal points, so what's the,
I can comment on that, but perhaps IC Chair Chandra wants to share his perspective.
Sure. I mean, we all had our own opinions, so I'm speaking for myself, not speaking for the committee. We began work 4 years ago to take a plan that was 47% funded to liabilities to try and get it back to a more healthy status without taking undue risk. And that's exactly what we did. We outperformed. We went from 77th among peers to second. We did that not knowing what our risk appetite is, because we can't really know that unless our sponsor tells us what our backstop is. If you have a big backstop, you can take a lot of risk. If we take a lot of risk, we then risk being able to give retirees their monthly checks. So we worked very closely with our risk consultants to figure out what was an acceptable risk budget. That's the terminology I use. The board should be thinking in 10 and 20 and 30-year horizons. We should not be thinking in 1 or 2 year horizons. The current mix that we came up with is a standard deviation of 12%. So all four of these options are roughly around there. But it is my opinion that we need to try to maximize risk while doing the best job we can of not putting the plan at risk. Our Sortino score, which is a measure of risk, was top decile, while we also produced top decile returns. That's almost a feat of magic that I give the CIO and the consultants and their staff and the staff a lot of credit for. I think what we've done exceptionally well, and this was evidenced in, I think, March of 2020, which is have a long-term horizon. But if there's an event-driven circumstance by which we want to make changes, we focus on that event. Because I don't trust anyone in this room's opinion on duration risk, on interest rates, on what equities are going to do. The board in 2009 went into the most conservative stance possible for about 8 years and missed out on the biggest bull market. And that's a large reason as to why we are in the shape that we are in. I've been in the private markets for 20 years. I don't trust my judgment. I don't trust Larry Summers' judgment on what's going to happen in the next 6 or 12 months. So I Trustee Chin and I were talking about my legal background, which I don't admit to very often. I try and keep that sort of like a Vietnam flashback for me. But one of my favorite concepts from the law is a rebuttable presumption. And I have, when it comes to asset allocation, a rebuttable presumption against changing. There has to be a really strong case as to why we are changing. It has to be event driven. There has to be something that the staff and the consultants are advocating for us to consider. And then, the wisdom of our collective judgment. But absent that, what Makita does is they build these stochastic models that account for all of these scenarios, even more than any of the scenarios we've mentioned or the studies you've cited or the counter studies that I could cite to that, like the chief strategist at Morgan Stanley thinks that global equities is the place to be for the next decade, particularly in emerging markets. She may be wrong. And so for those reasons, unless there's a real compelling reason, I think we've done a really nice job, as Trustee Horowitz pointed out, with the immunized cash flow. There are transaction costs when you change. Our private assets, the one thing, I was at a presentation from Hamilton Lane last year. They've been covering private assets. They have 800 billion under management. They've been doing it for about 25 years now. And they said, the one thing is, if you're going to do private assets, you got to commit to private assets. You've got to be in it for the long run, because you do have the lag. And you don't want to be getting out right at the time when the valuations are the lowest, because you essentially seal your fate in a poor return environment. They also have data that shows that private assets outperform public markets, probably not to the degree that anyone says, because I think there is a little bit of fudging in there, but directionally it's probably correct. So I know I've said a lot, but for all of those reasons, unless there's a real compelling motivation to change, we make these asset allocations expecting the next 3 or 4 or 5 or 6 years to have these types of events that we're experiencing. They're not de novo. They're actually, they're embedded in the modeling that creates the asset allocation. And the last thing I'll say is, at some point, I think it would be worthwhile to have a conversation about moving out strategic asset allocation to a 3-year or 4-year cycle. Because one of the things we've done really well, I think, over the last 3 years is institutionalize our investment program, which it never had been before, through governance, through our investment policy work with Cortex, the way we do strategic asset allocation now. And the more we can get away from sort of short-term thinking and really think about this in a 30-year horizon, the better. So my 2 cents, or 3.
Thank you. Trustee Keller, it
I'd
sounds
love
like,
to
jump in.
Is I've often told people, I ran the transition management business for $1 and I am keenly aware of transaction costs. There was a great paper by Bob Wright, who was the former CEO of Percy.
Hey, Mark, did you push your button?
I did. Should
You
be
did. Maybe move it closer.
sorry. I don't want to push your buttons. So,
That's a good one.
but Bob, was CIO at Percy, talked about how you really do need to have a longer term asset allocation strategy that's consistent. And I think that the 3-5 year horizon is exactly the right way to go. Because as we all know, we do have trustee turnover on the board. Just in the short 2.5 years I've been on the board, we've had several trustees turnover. We want to make sure that we have a strategy that staff can implement. We don't have personalities, new trustees, all due respect to the newest trustees. So I would think, like Trustee Chandra, that we want to only make changes when there's compelling reasons, such as we did during the pandemic. Or there's just a real reason to do it. Thank you.
Well, I may offer the possibly rebuttable presumption, or the presumption that may be rebutted, just to give you the full flavor of the discussion we had at the IC. I agree we need to take a very long-term view. We're investing for 10 and 20 years. We should not be adjusting our asset allocation year by year to account for rapidly changing conditions. That's a fool's errand. But I do believe that as the years go by, we can look at what we think has perhaps been a strategic, more permanent change, and to adjust the asset allocation accordingly. The options before us are all fairly similar. There's only very modest changes, so we're not talking about some radical changes. And in fact, our asset allocation has remained exactly the same since our fateful March of 2020 decision to increase the risk of the plan, which, as we pointed out, was extremely timely and served us well. So what are some of the long-term changes that I perceive take place in the market? I believe emerging markets, and China in particular, is an area that has become much less investor-friendly. Ever since the government of China decided to pull the ant IPO, there has been a long succession of government activities that have been hostile to investor interests. Just recently, I read an article, I believe in the past week, that local consultants are being arrested or harassed, the kind of people who actually perform the due diligence that investors rely upon. If we were to flash forward, Nikita, into your appendix, I believe on page, I know you know where I'm going with this. The model that we rely on, so carefully built, if we look at page 27, relies on inputs. And the input is Nikita's estimation of future equity returns. Now, in the area of fixed income, it's been fairly accurate, but in the area of equities, it varies, as well. It's a much more volatile sector. And in emerging markets in particular, we can see that if we look at the green line, which is the forecasted 20-year expected return, has been consistently higher than the actual 10-year return since at least 2005. And the gap is pretty large. It's about 12% expected versus 4% realized since 2006. So I think there's some real reason why we might want to de-emphasize emerging markets. It may be the returns may be overestimated in the model. And China particularly concerns me. I don't want to be facing a situation. We didn't have a large investment in Russia when they made some very sudden and strategic turns, but we do have a large investment in China. It is actually the second largest single country investment for our portfolio after the United States. We're slightly underweight China versus the world, but it's still a big component. So one change I would like us to consider is reducing our emerging markets exposure. Another concern, which we alluded to before, is downtown office space. It seems to be possibly in a secular decline. I'm not sure if people are going to return to the office the way they once did. It sounds like our exposure there is relatively light. So I'm not sure what asset allocation changes we would make to accommodate that, but I think that is a more or less permanent change that one would need to accommodate. Thirdly, a major change has been the increase in inflation and the associated increase in the returns to fixed income. So that is a place where we might safely deploy some assets where we haven't deployed them in the past. And then finally, one concern I have is in venture capital. We probably wisely only deployed about 60% of our pacing plan in the past year. And I don't want to create a situation where we feel somehow even subtly or psychologically the need to invest in that very risky asset class with very, very long feedback loops in terms of discovering whether we've made a good decision or not. So I would be very supportive of a reduction in our VC allocation by 1 point to 3%, so we have a better chance of fulfilling our pacing plan. Police and fire, I think, are they at 3% on venture capital? 4%. They're at 4%? So they can go their own way. So those are some of the longer term trends, strategic trends that I think we can consider accommodating with asset allocation. We haven't changed it in 3 years, and while we shouldn't be changing it rashly or radically, we should consider changes as time goes on. So that has been the tenor of the debate and the discussion at the IC. Are there any other questions or comments or observations? Dare I say rebuttals?
When you rebalance 2% emerging markets equity, is it all going to be China or is it like
That's something that we've discussed, following these conversations, with the investment committee, is different ways that we could just reduce China exposure relative to total emerging markets. But ultimately, we think if the board were to want to reduce emerging markets and China, that just reducing the full asset class exposure rather than trying to, weight individual countries would be a better way to do that. And we're also, from the consultant perspective, I'm a little leery of the board, determining we want this much in this country, this much in that country, because that I think can go down a road of perhaps not good governance. So I think, if you were to consider reducing emerging markets equity through mix C, that just reducing 2% out of the total asset class across all exposures would make the most sense. And that would then also reduce China.
Is there any movement in the consulting class to peel China out of EM because it's such a large component of EM?
Yes, and we've been
look at
hearing
that
about
separately.
that for, asset managers wish to have strategies that, that they can market. And so we've been talking, asset managers have been talking up China only and EM ex China strategies. One might argue that it's part of the proliferation of different strategies that leads to more fees for asset managers. But there are a lot more options than there used to be for individual country funds. Some folks want to peel out China so that they can invest more in China. Other folks want to peel out China so that they could invest less. But that is something that some pension plans are doing. I would say that that's more often at the staff level, where the board is setting an allocation to emerging markets and the investment staff is selecting the individual strategies where they might, find a skilled manager that they think does China better and then do EMX China as well.
Yeah, I would certainly think that relying on staff, which are having ongoing conversations with managers, are very, very close. to Many of these issues is probably a very good idea, as opposed to us trying to contradict.
And that's what's happened so far is that, your staff has found India more attractive on a dedicated basis than China. And so you have a couple of dedicated India funds. Within a particular.
Thank you. I mean, for what it's worth, I shared this at the IC. I've spent some time talking with some of the sovereign wealths and some of the large institutions in the Middle East, and they are proactively moving away from the United States toward China. For instance, I think it's UAE, might be Saudi Arabia, 33% of their GDP is based in China, while their sovereign portfolios are 2% exposed. They want to move that to 8%. That's a 4x increase. And they're saying almost all of it will come at the expense of the US. There seems to be a multipolar desire to make the US less prominent as a reserve currency. We should all be scared by that, by the way. So and if you ask me the places to get alpha on a risk adjusted basis, I don't know that it's fair to call venture capital risky. I think the underlying investments in a portfolio can be risky. I think better managers are good risk managers, but I would say emerging markets, private credit, and innovation, which unfortunately can be played through venture capital or not played through venture capital. So just to be fair about that, are probably the places on a risk adjusted basis where you can find alpha for a portfolio that needs alpha pretty desperately. Now, that's just one opinion, just like Trustee Horowitz just had one opinion. I don't put a lot of confidence in his or in mine either. I'm sorry. I didn't mean to look at you.
Okay, any other?
Confidence in your
Are there any other comments? Any comments from the public? Well, based on that, is someone prepared to make a motion on adopting a asset allocation for this year?
I will. I've
Can
been
you
pretty
speak a little
quiet
louder?
through this whole time, but I will make a motion to stay at the asset allocation that we currently have.
I'll second that motion.
Okay, we have a second. We have a motion from Vice Chair Jennings and a second from Trustee Linder. Would anyone like to make a counter motion?
I would like to motion that we select mix C for our asset allocation. I think that would serve us better in terms of where I have seen in the evidence that I have access to shows that we should be heading.
Okay, so we have a motion to adopt mix C. Is there a second for that motion? For sake of argument, I will second that. So we will have a discussion then whether to maintain the current Fed allocation or adopt mix C. Is there
We would consider that a substitute motion.
a substitute motion? Thank you for that.
Vote on that first.
There was not a second for the first motion?
There was.
There was.
It was.
There was a first and second for the first motion.
Trustee Linder seconded the first motion.
Yes. Okay, so we can discuss both motions at the same time?
No, we're discussing the substitute motion to go to mix C first, and you'll vote on that before you discuss the first motion.
Okay, so we will, according to our legal counsel, then discuss whether to adopt the substitute motion, which is to adopt mix C. Is there any further discussion? Any further comments from the public? If not, we'll have a roll call vote to adopt mix C as proposed by Trustee Abbott, seconded by myself. A roll call vote, Vice Chair Jennings,
Nay.
Trustee Chandra,
Nay.
Trustee Keller, nay, Trustee Linder,
No,
Trustee Avasti.
No.
Trustee Abbott,
Yes.
and I vote yes. I believe we're in the minority. So then we move to the main motion of the original motion, which is to maintain the current Fed allocation. Is there any further discussion on that item? Any public comment? Hearing none, we will have a roll call vote. Vice Chair Jennings,
Aye.
Trustee Chandra. Aye. Trustee Kelleher. Aye. Trustee Linder.
aye.
Trustee Avasti.
Aye.
Trustee Abbott.
No.
And I vote no as well, but the motion carries nevertheless. All right, thank you. Well, we're moving ahead of schedule quite nicely here.
Do we, oh, sorry, do we need to come up with our questions?
Well, we're gonna, yes,
We have 20 minutes.
we have 20 minutes. I thought we might cover a few more items on
Okay,
the
fair
agenda, and then at 10 o'clock hour, we'll have a short recess. And well, just to preview it, we're gonna ask the applicants to step out of the room. We will have a discussion of the questions. We'll agree on the questions and then invite them back one by one to answer the questions. Okay. So we have nothing under item number 4, old business, new business. And oral update from the CEO, Mr. Pena.
Yeah, thank you, Mr. Chair. As I do every month, for the new trustees, I provide an oral update to the board of issues that are transpiring at the plan level of the staff. And so I wanted to first start by letting you know, you may have noticed that this morning, Isela Chaparro is not here. Isela was our replacement to Linda Alexander, who retired. By the way, she says hello. She's very happy and staying home. I don't believe she's actually watching the meeting, but if you are, just say hello to Linda. Isela actually left to take a job with the water district in the same capacity, working for the CEO there. She told me not to take it personally. I wasn't sure what to say, but in any case.
Wow. Making more money. Let's be
Yes,
cognizant
yes,
of that.
Yes, she did.
Yes.
We wish Isela the best and thank her for her contributions over a month and a half that she joined us. And I also wanted to let you know that in the meantime, we have named Michelle San Miguel, the interim executive assistant to the CEO. And you may not be able to tell, but she is just so excited to be in that position and working with us. So I just want to again, let you know about Isela and welcome Michelle, who, as you know, has been with us for a few years now. That also opened other positions at the administrative staff level. And we also want to welcome Cheryl, who actually was already working with us, but not as a permanent employee of the office. She was working as a temp on a contract basis. She's now a permanent member of the staff, so we want to congratulate and welcome Cheryl to her position. And also accounting is actually working on their recruitment for the accounting position that they have at this point. And I also wanted to let you know that staff is also working. We also have an overstrength for the other staff specialist position in the administrative staff, who's going to be working with Michelle. One of those staff specialists will work with police and fire, the other one with Federated. So we are also initiating that process. And I also wanted to let you know, we are here this morning, which is not our typical location for the meetings. I just want to let you know, we will try to keep you apprised as the meetings come up throughout the rest of the year. But I want to let you know to please keep track of the meetings locations when you get your calendar or you get the agenda. Because the city is actually going through some improvements and some constructions at the city chambers, at the downtown location. And so it may happen from time to time that we may not meet in our regular wing location. We may be at the actual chambers, or we may be here at the 5th floor location. So we will try to keep you apprised ahead of the meetings, but also to please let you know to keep track of that information. And that, did I leave anything out, Michelle or Barbara? If I did not, then that concludes my comment, Mr. Chair. I'm happy to answer any questions.
Good, thank you. And in fact, are there any questions from trustees? Or from the public? Great. We'll try to get to item 5B, oral update from the city council liaison. Ms. Davis?
Well, I don't have a mic, so I don't have an update.
Well, we can get you a mic.
Well, I just happen to have a mic.
I didn't know there was one there.
There you go.
We had our budget study sessions over the last couple of weeks and, the managers, the city manager will be releasing many manager budget addenda, so MBAs, over the next couple of weeks. The mayor's March budget message will be coming in early June, and we will be discussing that on June 13th. June 12th in the evening is our last public hearing for the budget. So that's my update. Also, I'd like to request if we have if we're gonna have meetings here, that we can have an alternate location of City Hall noticed for the 18th floor, so that I don't have to be running back and forth, and potentially our city employee who's on Federated could also be meeting there. We can usually get 1853 or 1854 as a conference room as an alternate public location, because Zoom is not legally allowable unless you have specific, by state law, specific reasons, thank you, for being on Zoom. And so if we could have that as a listed alternate location on the agenda, that would be a lot easier for me at least, and potentially also for Julie.
Okay, very well, thank you.
I have a comment on that. Per legal, we are following the legal stance for people, right? Counselor Chen?
Yes, trustee Linder and trustee Jennings are appearing virtually by the traditional Brown Act teleconferencing rules. But to your point, the alternative location at City Hall being
Well, they have to
available,
be noticed.
it is noticed on the agenda.
Okay, I
Yeah.
didn't see it on the agenda.
It's on the first page.
It just says Zoom though.
You know, it has their addresses listed.
Okay, that's not what I just downloaded.
Well,
And also at the beginning of the meeting, Councilmember Davis,
I can show you where it's this morning.
Counselor Chen went through the verification process to make sure we're posting the agenda, that we have a ADA available site. So just.
So,
Okay.
Berto, is that something that can be easily accomplished, having an alternative site?
We could certainly do that. Again, we usually follow and the stipulated requirements in the Brown Act to make sure that the agenda is properly noted, but yeah, we have to at some point do that. We certainly can do so.
Great. Any further questions for our city council liaison? Any public comments? Okay, thank you. Move on to, I think we can actually accomplish item 5C. Discussion and action authorizing to negotiate a fourth amendment with Marty Boyer, our communications consultant.
Thank you, Mr. Chair. I'm Barbara
Okay.
Heyman, Deputy Director. I'll be talking about this memo. This memo is requesting approval to negotiate and execute a fourth amendment to the agreement with Marty Boyer from Communications Advantage to extend the term of the agreement through June 30th, 2024, and no additional budget is being requested. The services provided by Ms. Boyer are related to the board's strategic plan, communication plan that is. The board adopted that plan at their May 2020 board meeting. Ms. Boyer, she primarily works with ORS on the newsletter and social media posts. So per the board's policy, the CEO is authorized to enter into a contract up to 50,000 in value over the term of the contract. Any contract above this amount requires board approval. The board approval is also required for any contract that would result in a cumulative contract value with a single vendor above 50,000, which is the case for this contract. So staff are requesting approval to negotiate and execute a fourth amendment to the agreement with Ms. Boyer to extend the term of the agreement through June 30th, 2024 with no additional budget.
Great, thank you. So what is the net total that she will have received for the year?
The not to exceed amount on this contract is 75,000. That's the existing not to exceed. Typically, we're spending about 12 a year.
12.
Yeah.
Any questions from trustees? Any questions from the public? Entertain a motion to approve the contract negotiation.
Yeah, I'll make a motion, trustee Chandra make a motion to approve the extension.
Okay, so we have a motion from trustee Chandra. Is there a second?
I'll second it.
We have a second from trustee Abbott. Any further discussion? Any public comments? We will vote. Vice Chair Jennings,
Aye.
trustee Chandra,
Aye.
trustee Keller. Aye. Trustee Linder,
aye,
trustee Avasti,
Aye.
trustee Abbott,
Aye.
and I vote aye as well. Motion passes. Which brings us to item 5D, which is our time certain for 10 o'clock item. So as I was mentioning, what I'd like to take a short break before the 10 o'clock hour. And when we return, I would like to have, we have 4 candidates. 2 are present here in the room, if I'm correct.
2 will be here, 1 remotely, and 1 that will not make
Cannot,
a meeting. Yes,
okay,
whatever.
but still wants to be considered correct based on his written submission. So I'd like to, I've asked you all to consider questions we would ask. I want to discuss that and figure out maybe a short list of questions that we will pose to all applicants equally. We will discuss that while the applicants are out of the room. How will we handle that though with our applicant who is online? Sorry? They'll be in a breakout room, okay? Then we'll call them back one by one, so there's no advantage. No one will hear the question before anybody else. We will ask them, and then we'll, while they're all here, we will have additional time for additional questions, clarifications, and then we'll go to our selection process. So any questions or comments about just the process?
I do have a process
Okay.
question. So I mean, I assume we're gonna come up with standard questions to ask everyone in the interests of fairness, right? in the
Yes.
Process, but can a follow-up question digress out of those main questions that were asked originally?
Yes, that was the intention, and they could be posed individually to a candidate or to all candidates, or clarification on what a candidate may have said, and you know, whatever we want. So it'll be partly controlled and partly free flow. Okay, so with that, let me call a brief recess, 5 minutes, and we will return at the 10 o'clock hour. Thank you.
Okay. Yes. We changed the way we did it, so it wasn't private.
Right.
So that.
You will start at 4:30 or immediately after. We can start right after this.
Recording stopped.
For some reason, I thought we had to raise it.
Okay, so.
That's fine, the reason that we changed it. Okay, let me just double check. Hold on.
There was a one. So I'm thinking about 37.
That,
Yeah.
other people.
Appreciate you being here.
The way that we did it, which is basically the same way that,
Yeah.
Candidate forms. These are.
Yeah, yeah, we had a big back and forth. That was the appointment of the council sees whether somebody was cheating essentially.
So this way, there's no.
Right.
Because there's no possibility.
So hopefully our format meets the legal requirements. I mean.
Oh, I'm sure that I'm just telling you
Yeah.
why we changed it.
Right, okay. I understand. Go ahead. We will do it.
And why we. That way going forward.
Yeah, we've
we've never been in this situation before, where we've had multiple candidates, or open trustee.
Well, you eat breakfast, but then you again. So.
Well, I mean, there's always something extra. On the other hand, my alphabetical order.
No, we do a rotation.
Right, no, I saw that. So,
So,
I'll just, beat my those get to the list, have a little bit more advantage.
Yeah.
Yeah.
then it all runs out.
And you look forward to your participation in the engineering process as well.
Oh, I don't think it's appropriate for you to do that.
Well, you know, I know,
Deborah?
well, you will remember. Ask questions.
Mr. Faulkner? Yes, I'm moving you to the breakout room.
Not the bread.
Is that good for you?
Sorry, there's a lot of noise. I think he's gonna be considered to break out.
No, it's just a bunch. Yeah.
But I'm gonna move in there.
Okay, just okay.
Coffee?
Oh, yeah, well, when I'm used to coming.
Yeah.
Much closer to City Hall. Right?
Last night was fun. I joined the board.
Further, right?
Yeah. Oh, yeah. Well, we met in person. I was for the joint session.
Oh, that's right, that's right. Oh, my God.
Not now.
It is a memory.
My view did not hold today.
Did we ask them politely to? Did we ask them politely to be?
I don't know how black you were.
Yeah, they are.
Oh, yeah. But,
You should have emailed that.
I did, so yeah. Okay.
Thank you for now.
Of course.
Yeah.
I mentioned before,
We have a lot of new board members and I just.
You know, some of the-
Council member, time is running out, so I just wanted to take the whole by the hands.
I appreciate that. So your time is running out and you're coming out the board? I mean, I'm council.
Yeah, I'm just out at the end of 2024. So I have 19 board left. Yeah.
What do you think of my new next?
Well, I'll stay in public service, in some way, shape or form, nonprofit.
Yeah.
For a few years, and then we've got an RD trip plan, for about 5 years to be on board for a year. Yeah, yeah. We'll see if it actually happens, but that's kind of where we're long.
I have a friend.
I know, good to see you in person.
Yes, absolutely. No, I guess I saw you at the big joint thing, but not
Yeah,
really.
that didn't even really count.
That was weird. It was just.
It was super weird.
Yeah, and I was expecting to be like center, the three of us presenting, but they kept us spread out. I mean. Yeah. Was you.
For the
Spring with me?
guys.
Yeah.
Yeah, Cam and I were like, why are we here? But it is, you know.
Yeah, no, I appreciate it. Yeah.
I think it was weaving.
You were-
Like happened to be
Yeah,
quarter
you
of it.
No.
And then I didn't get there.
We can do that.
No, that's fine.
Conversation about the work that JPC's doing around incentive comp. It's just, I would love to get your thoughts if you're
Yeah,
okay.
I gotta, yeah, no, I would love to, if you mind.
Okay, good.
I got a short briefing about it from Cheryl and.
Okay.
I mean, I've been doing separately
Yeah,
about
I mean, look,
that issue, another issue.
there's a tension here.
It just now done, doing whatever work it is to do.
Sure, it's trying to retain either this.
Well, yeah, well, I don't want to meet if they don't have anything to share.
I've been thinking about this. Since I've been reporting to government.
I haven't lived with
Humans, I want a system to.
Right.
I guess we gotta get back.
Yeah.
Checks and balances, like.
Right. Oh,
I
yeah.
just wanna make it hard, so
Right.
like. So this, to me, this is like one of the last pieces, but It's not an easy process.
I think so.
Go ahead and reach out to my office.
You can have one-on-one meetings. Last day without.
Yeah.
Yes.
Someone else.
Is there? I'll find a.
It's not called today. I mean, I can be called. Yeah. Nice to meet you in person. Yeah.
Yeah, right. Exactly. Know what you mean.
Okay.
Also, it was about you medication. I think it was about.
Yeah.
So the alarm was about the break.
Oh.
Nothing to do with you. It's all about me.
Well, in that case, I'll get a little call.
Yeah, he's gonna.
This is the time when I microdose. Yeah.
Yes.
That's the only way I can manage this thing.
I see.
Okay, I think it's time to call the meeting back to recess.
Recording in progress.
Thank you.
It wouldn't, I mean, it would.
So
It would.
I've asked you to consider what questions we might ask of the trustees.
Yeah.
Hopefully you've seen the memo that was sent out by council, which I was only interested, really myself.
Yeah, I think so.
So obviously, all these candidates went through a city council process where they were questioned largely on financial issues. And it's up to us to figure out what we're gonna ask. All the candidates equally. So are we in closed session at this point?
No.
No, we're in open session, but the candidates answer questions.
Correct.
So the floor is open to, I've got two questions in mind myself, but what questions do you think we might ask? And if they're redundant, we'll kind of get them together.
Do you want to read the questions that council, I think the email went to you and vice chair, so you
Right.
want to read them,
Let's see what the trustees come up
Okay,
with.
come on,
And
sure.
I think it was more like general guidelines.
yeah.
Yeah.
As opposed
Yes.
to specific questions.
Okay, I'll start.
How many questions? Oh,
I'm thinking, let's four or something like that, 4 or 5. It's, we've got three candidates. Again, we have 3 candidates here to answer questions. One who is not here, but will like to be considered based on his written application. So I'm sorry, Vice Chair Jennings, go ahead.
Yeah, sure. So if we're gonna stick to 4, I just had 2. I took one from council, and that is, do you understand that you are not representing the city in this position, but serving on behalf of all members and the system as a whole? Now, it's kind of a yes or no question. So, and then the other one is, do you believe in a defined benefit, i.e. pension plan, versus a defined contribution, i.e. 401k? So those are my 2.
So Trustee Jennings, I'm not sure what that would be. I believe in both.
So may I jump in here?
Oh, I guess
Sure.
for the city retirement system.
So one of the purposes here for doing the interviews is to test their commitment and capabilities to serve on this board in terms of their time commitments and ability to review the materials and be a fiduciary trustee of the board. I think those are the guiding principles in terms of asking the candidates what kind of questions. For example, time commitments is the huge one, and if we have a trustee appointed to the board, we would expect that they read all the materials, be prepared to come to the meetings and engage. And so with that, I do want to give that as a kind of guiding principle, because from a fiduciary standpoint. Thank you. Oh, you gotta turn it on.
I also have a question I thought would be interesting, and that would be, what do you, what do they know about pension plans, either from their own experience or from anything that they may have researched? So it'd be interesting to see what kind of background people may be bringing to this and understanding Because I think some people have had some experience, some people haven't had experience, some people may have done some research, so if you could I'd love to understand more about what they already know. I don't know.
Trustee Chandra?
Yeah,
something that you got a couple questions?
Maybe this is even a follow-up, but I certainly, when I became a trustee, I think I underappreciated how many issues we deal with that are not related specifically to the pension plan.
Yeah.
And the investments. I think people think of this role as dealing with investments. In fact, you do very little of that, and if you're not on the investment committee, you really don't do much of it, other than when an issue comes to the board. But we are dealing with disability, we are dealing with audit issues. When I first joined, we had a massive overpayment to retirees. We spent umpteen hours in closed session with Harvey trying to figure out how we were going to manage that. So some way in asking a question that also prepares people for the totality of the role.
Okay,
Great point.
any other inputs? Trustee Kelleher?
No, I think certainly, time commitment is a very, very big, important question. Knowledge of pension plans, how they work, also the breadth of the role. Because, certainly, I would think that most new trustees will not get to jump onto the IC immediately. And so you're beyond governance, your disability, your audit. And those are also, take a long time. And if you're not prepared for that, you may not be able to be a trustee.
And then the other thing is just trying to understand if people realize, I mean, their fiduciary role, and they'll get trained also after they become, if they're selected. But, you know, the difference between governance and their role as trustees, focused on governance versus the day-to-day or the tactical that either Roberto's office does or Purdue's office does.
Yeah.
I noticed a positive change in that direction since I've been a trustee. I think I'm the longest serving on Fed. But, you know, call it good old fashioned governance versus micromanaging.
Yeah, distinction between staff's role
Yeah.
and trustees' roles.
Yes.
Okay. Questions I had are similar in terms of the breadth of the role. I specifically want to ask them, a lot of what we do is making judgments about people, either hearing disability claims or evaluating our CEO and CIO annually and setting their raises, and ultimately recruiting, hiring, and firing the CIO and CEO. So I'd like to understand their experience evaluating people, and whether in a formal or informal process. So I think that's a big part of our non-financial role. I did have one financial question, but I guess we can leave that aside for now.
What was it out of curiosity?
Well, I was just curious, what's their view on Alpha? Is
Just an easy.
it's good, easy. It's the first letter of the Greek alphabet.
Maybe these days.
It's, you know, alpha, is it achievable? Is it desirable? Is it repeatable? What is their review of alpha? So I think that has gotten to the core of a lot of debates and questions we've had on a range of our committees here, whether it's the IC or the JPC. So
Are these days of that question again, like what's the investment philosophy?
perhaps, yeah. So that was well exercised by city council, so I didn't want to get too deep into a broad and open question about investment philosophy. But maybe we should.
If I can comment, Mr. Chair.
Please.
I apologize if I'm overstepping here, but I recently had a meeting with the city, and one of my pet peeves over the years have been that I think Trustee Chandra indicated it, investments is critical to the plans, and it's the overriding factor that we deal with in most cases. But I'm always concerned. I would like to see more diversity within the boards in terms of background and knowledge. And so my only point is that when you ask questions, to make sure that you don't limit it to investment to the questions.
Mhm.
Because we want to hear from the applicants. Not only what kind of base knowledge they have, but in general, issues that allow you to make a determination that are all related to investments, because I think that kind of skill set is critical to the plans. And so just, again, because we're talking about alpha and investment philosophy, I just want to make sure, not that they're not important questions. I want to make sure that we keep track and make sure that we think about questions that are all related to investment background.
Yeah. I concur with Roberto here, because everybody comes with their own background and knowledge base, and what they know for their own investing, or if they are someone who gets a pension or doesn't, really doesn't matter in a way. What matters is, are they going to be a good fiduciary for the pension plan? And understanding the time commitment. I mean, that's, hopefully someone doesn't apply for this if they're not aware. But ideally, we're, there's a lot of educational opportunities as being a trustee. And it takes time to come up to that standard, to understand what alpha is, or what a lot of the other terminology, or what a pension is for a 20-year investment horizon versus your own internal, investing. So I think a lot of these candidates are all very good candidates. I've read through their resumes, I've read through their application. So maybe sticking to a bit more what Harvey threw out there, or Maytac is my 2 bits.
Okay. So we have a list of questions. A lot of them are along the line of, do you realize the time commitment? Do you realize that you don't serve the city? So these are kind of going to be short answers. Yes or no.
Yeah.
So let me repeat what I've written down and see which ones we want to focus on. Fiduciary role. You understand that you do not serve the city, that you're serving the members. Do you believe and support a defined benefit versus defined contribution plan for the city? Do you realize the time commitment and the resource and effort commitment to the board? What is your general knowledge of pension plans? Do you understand the breadth of the role, the non-investment issues that are concerned, including making judgments about people and hiring and firing? Governance issues, do you realize the role of the CIO and staff versus that of the board? And then finally, anything about their investment philosophy, their views on alpha, etc. So amongst that long list, how should we narrow those down?
Can I just offer one thought?
Absolutely.
Yes or no questions tend to be kind of leading. I mean, they're really easy to figure out what you're looking for, and they're also not very illuminating. So if you have to eliminate, I would either consider rewording the yes or no questions to elicit a little bit more information, or to eliminate them.
I was gonna say the same thing. Either we turn them into open-ended questions, or you could keep them because they're gonna be 10-second answers, and we could have 7 questions then.
I do agree. Yeah.
As a litigator, the way to open up a yes or no question is, what is your understanding?
Yeah.
Do you understand?
Mhm.
But if I may, Mr. Chairman,
Absolutely.
there's one of those I would strike, and with all due respect to Vice Chair Jennings,
Mhm.
this is not a public policy setting board. Whether somebody believes that a defined contribution plan is the right thing to go, or it believes in a DB plan, this is a DB plan.
Mhm.
And this board has no role in making any changes to what plan is available. That's the city's job. And so I would say, I would rather, part of the purpose of the questions are to educate as well. At the interviewee, so that they know the scope of the job and that sort of thing. And I would hate to lead them to believe that part of the scope of the job may be that we're going to consider whether to convert to a defined contribution plan and that we care what your position is on that. I think that one steps over the line.
I suspect it was asked in a sense of the person's commitment to the idea of a public pension plan, but I take your point.
I mean, or you could say, we hope you understand this defined benefit plan and your obligation is to deliver timely benefits to all the members. You know,
I'm okay. I'm okay having that removed.
Okay. Okay, we're still left with a lot of. Yes. Okay, Trustee Linder, please go ahead.
Yeah, I just wanted to expand on the chair's point about the employee-related ones. And what I was looking at was asking their experience in dealing with employees, employee issues such as evaluations, hiring, firing, recruiting, and employees who are injured on the job and having to deal with the reasonable accommodation. Something like that. I think your point about the work of the board, at least in my experience with it, we've spent a fair amount of employee-oriented time, whether it was around salaries, bonuses, or disability cases. And so that's I just wanted to expand on that. Thank you.
Okay, thank you. That was the tenor of my question.
Can I make a suggestion to your investment related question?
Okay.
If you do something like that, and then maybe just rephrase it as, plan continues to be underfunded. What thoughts do you have about our ability to bridge the gap? So make it broader, instead of focus specifically on alpha. Quite frankly, it also addresses other potential answers and issues that aren't specifically related to investments.
I had a more general question, like based on the understanding when, the major risk of
I'm sorry, say, we can hear you.
based on your understanding, what in your opinion are the major risks and opportunities facing the retirement system?
Yeah, that's great. Okay.
It's a tough one.
Yes. San Jose follows San Francisco to do.
it would be nice to know what talent they're bringing to the table. Do they know? Do they deal in risk management? Do they deal in cybersecurity? Do they have a background in personnel administration? Do they have a background in IT? We deal with these issues all the time.
Okay. The list is getting longer. Yeah. As we speak, not shorter, which was my intention.
Okay, so there's a question that Harvey had, which is, do you have the ability and willingness to devote the time it takes to be, well, this is subjective, but to be a good trustee and share the responsibilities with your colleagues?
Okay, well, that's time commitment seems to be a key one. So I think we're going to keep that one in.
Okay.
I think what talent do you bring to the table is a fairly open-ended one, so we can ask that. Okay. I think perhaps biased to my own question, but Trustee Linda also brought up specifically experience with employee relations, employee hiring, firing, evaluation, which figures in a lot of our time.
Well, not only just employee relations, but just dealing with human resources issues. So disability and, because that's the tough one.
Yeah,
At least for me, because I was.
yeah, I think we all struggle with that. I know I do.
And
Well, that other question, sorry, Harvey had as well, I think addresses that. So if you like that question, it's like, are you aware that the position requires participation in an understanding of more than investments? It includes benefit administration, disabilities, IT, risk management, direction and oversight of executive personnel, et cetera. Do you have experience in these areas? Are you willing to learn and perform these functions?
Well, I don't want to make it a yes or no kind of question. I want to ask their experience.
Well,
dealing with
do you have
HR.
experience?
Perhaps the last sentence of that question. Yeah.
And how many have
Yeah.
you?
I've identified 3 so far.
How about,
So-
I like Trustee Abasti's
I do too.
question.
Yeah,
Remind me which one that was. That was,
Strengths, weaknesses, opportunities, something along.
Risk.
Okay.
Um,
For the retirement system.
On the major risk and opportunity.
Yeah,
okay.
And maybe you could include the investment program that makes it a big open-ended question, and subsumes the one I asked.
Okay,
And yes, and trustee Avasi's question also subsumes the knowledge of the pension fund and commitment, because that already will be demonstrated by answering that question.
Yeah.
thank you. Excuse me.
I
All
would,
right.
I would love trustee Abbott to comment to the interviewee, say, I'm in my first meeting today, and here's what I've learned that I had no idea coming into my first meeting. I was going to end up having to consider. I assume there's some things that you didn't expect.
I would say that I think that we've all focused on the investment side of things, and I know that there were all these other things, but I still have to learn more about what those other things are. And for everyone to speak about how much time you spent thinking about disability and benefits and issues and things like that, is informative.
I think it takes 12 to 18 months to learn this role.
I'm still discovering things that I'm surprised and shocked, so.
I mean, I focus on like diversity, but I still wonder if I don't have a CFA, how would I understand all these investment related stuff? I mean, we'll have like a really.
You are correct. You are absolutely correct on that, but again, you are functioning as a unit, right? Just like when you have a team, not everyone's excel, have the same strength, so you have to work together. So you may have a CFA and have a lot of background knowledge on investments, but since that's not all this board does, then you need the input from people that knows about benefits or banking or some of the areas of disability. And so that's the beauty of working as a team and together, is that hopefully having that kind of diverse background, you can make better decisions together. Because what happens is if all of you are CFAs, well, first of all, probably wouldn't be very happy. But second of all, it will make for a very difficult investment decision making. I can tell you that for a fact. And then when we deal with other issues that are all related to investments, then it will be somewhat of a vacuum because no one will have that kind of background that is needed to make those decisions.
I think you're narrowing in on the.
Yes, I have 4 questions, so just to reiterate, not in any particular order. Are you prepared for the time commitment that this board requires? How much time do you think this may take per month? Secondly, what experience do you have in human resource issues, whether it's evaluating employees, evaluating staff, hearing disability hearings, or similar experiences, either formal or informal? The plan currently has a large underfunded gap. What do you see are the risks and opportunities of the retirement system? What is your understanding?
Should we even mention that? Or should they bring that up to us if we're on?
Okay, don't lead the witness. And finally, in general, what talents do you bring to the table?
That's
Are we
good.
in agreement then?
Yeah.
Okay,
Oh, who's gonna ask who's gonna answer the questions? Do you want to do it since you have it all written down?
I think I better.
Yeah, I assume.
All right, lock
So
and
we're gonna
load.
bring them in.
Let's go.
So we have, it's a good question. Let me just
Yeah, I just
reiterate.
wanted to be able to read the
We
resume
have-
of the non-attendee.
Right.
Yeah.
So-
Time to sort of make.
So we have with us today Doug Andre and Julian Vogel in person. We have Matthew Faulkner online,
Yeah,
and John Cleveland could not be here.
Okay.
But still wishes to be considered.
Okay.
And is that correct?
that is correct. And I want to respectfully suggest to start with the person that is remotely, because it's very tough to be on a breakout room and not knowing,
What's
hey,
going
when the
on?
meeting's over, are they gonna call me?
What
The
happened?
other 2 gentlemen are here, so, they know that we're still here.
Very sensibly. Okay, so if we are in agreement on how to proceed, let us bring Mr. Faulkner in from the breakout room. And let me know when he's online. You there? Mr. Faulkner, are you there?
Sherelle, are you? Yeah, and I see the breakout room is going to close in 32 minutes. I'm just not sure if he realizes that he's going to be.
He'll come back. Once the breakout room is closed.
Right. Okay, did you want to put me in the breakout room so I can tell him that we're?
Oh, that's good.
And
It's
Mr.
up there on the
Faulkner is
upper
with us.
corner, the right,
With us.
top right corner.
Mr. Faulkner, are you there?
Yes, I'm here. Thank you very much.
Great, thank you for coming. We really appreciate your interest in applying for and serving on the board. And we're gonna ask a series of questions that we're gonna ask of all the candidates. And then we are gonna have follow-up questions from all members of the board. So the first question is if you would like to make a brief introduction to yourself and tell us what talents do you believe you're bringing to the board as a applicant?
Okay, perfect. Thank you very much. And I guess I'll start real briefly with my studies and credentials and then talk to you about my passion for wanting to be on this board. So I've studied finance and statistics for all of my career so far, which has been the last 15 years of school, undergrad in finance, graduate degrees in applied statistics and international investments, and then finishing my PhD in finance, along with completing the CFA charter and an active member of the CFA Institute. Other things I do professionally would be I do arbitration for FINRA, so the organization under the SEC that really helps promote fair markets. And so we'd go through when there's problems, we would sit on panels to go through whether it was fair or not fair. And then lastly, I teach valuation courses. So I'm actively involved in the valuation process and expanding upon really focused in publicly traded companies, and then expanding that out into portfolio management as well. So that's my professional background and interest in the position from that regard. The reason I find it fascinating to be on a board that would oversee asset allocation for a pension fund is sort of twofold. One, the professional interest that I have, it aligns very well with all the work that I've done studying finance for so long and continuing and appearing to study it for another many years to come, that this fits right inside that process of not only bringing my knowledge in, but also learning additional knowledge about finance and investments. Where the second piece that I guess my passion for this would come from is I've always been involved with trying to help others. I volunteer for the First Tee, for example, in Silicon Valley to help kids learn life skills through golf. I serve on many different committees across the campus through my years here in an effort to try to make some difference. And I've never had the opportunity to do so in the field that I study, which is finance. It's always been and random other interests I have, but there's not many opportunities where you can try to make a difference and help those, meaning the beneficiaries, get what they deserve in the field of finance. So that's the major passion I have. And my last statement would say that as an academic, we spend our careers questioning and asking a lot of questions, trying to make the best decision and get to never a black and white conclusion, but a very generalized view versus anecdotal evidence that comes from practitioners. So I find that addition to the board could be valuable.
Great, thank you. Are you aware of the time commitment that this board service requires? And are you prepared to devote the time and energy necessary to be a well-informed and active board member?
Yeah, so Spencer, I believe I had the privilege to talk to you months ago when the application was open about what the commitments generally look like. And as you stated, it varied amongst trustees. So I'd be happy to hear more insight, maybe as a question at the end from me to you all. But two components. One, the meeting availability. I teach courses on Monday, Wednesdays. So if I can keep that, there should be no issues with attending meetings. Regarding the preparation that goes into the studying of capital markets, the studies of investments, evaluation of portfolios, of the historical to the newest potential investment opportunities, it's nice that it aligns with the career that I'm in. And as a professor, we have a lot of autonomy in our time and a lot of autonomy into what we do. And speaking with the dean of the business school and my department chair, that this is work that I would do as part of my work as a professor. So which would allow me to kind of double dip the time where I'm doing work as a professor, simultaneously doing work, prepping for the time commitment and understanding that the board has, because I've never worked in pensions. And I recognize that would be a transition that would be made from my typical portfolio management experience.
Can I ask a question?
Just sure.
Regarding that. So, first off, thank you very much for applying. I have found that, I also have an investment background and, came to the board sort of thinking, oh, it's all gonna be investments. It's not. And so you may be a very quick study in terms of the investments and things that Kate is sort of presenting. But a lot of the preparation is going to be HR oriented. It's going to be disability oriented, audit oriented, governance oriented. Can you tell me sort of how you feel about those?
Yeah.
How much time you actually could spend a week or a month?
Oh yeah. If you want hours, I mean, I don't know what's expected, but I could definitely find a way to put 10 hours a week into work if that's what's required. If it's more than that, then it'd probably have to be a discussion. But from my understanding and discussing with the chair, it seemed like that was plenty of time. Obviously, depending on what's going on, there's flexibility. But if I had to put a number on it, that would be it. Regarding governance, I think this points back to a bit of arbitration work that I've done with FINRA and the training you go through around really around what should have been or what is the appropriate way to handle a situation regarding these sort of cases around disability and retirement issues. You go into really a place where you're asking lots of questions. You're trying to see the entire picture as clearly as possible to make the most fair and just decision that you can. I'd imagine that skill set would analogously hold for when you have to hear hearings for potential claims that are coming in, that you'd approach it with a similar light of trying to get the full story, asking as many questions as needed in order to understand that story, and then ultimately following whether it be precedents or rules, and making the best decision as a team going forward.
Thank you.
The next question actually is fairly similar to what Trustee Keller just asked, and I think you perhaps largely answered it, but to make sure our format is the same for all applicants, we did want to mention and ask about your experience with human resources issues, and that includes hearing disability cases, and we also spend a considerable amount of time evaluating the performance of our executive staff, our CEO and CIO, and ultimately we do have responsibility to recruit, hire and fire the CEO and CIO. So what experience do you have either formally or informally in evaluating claims or evaluating employees or other human resource type issues?
Okay, so I've had the privilege at different times to be a supervisor and be in charge of hiring and firing and performance analysis, not related to finance. So I oversaw, for example, front desk employees across the campus in a prior institution where I had a staff of 25 that I was in charge of and hiring. The 25 that were, and then evaluating their performance related to very administrative tasks across different committees, most recently working with the athletics board across San Jose State, which is a monitoring and governance committee that really is focused on how academics and athletics has to work, and they have to be congruent, and there can't be ignorance of academics from the athletics perspective. And our goal is to make sure we're following NCAA regulations, that students have the resources they're supposed to have in order to be successful academically and in their athletics. So I've had a little bit of experience, it's nothing that I can stand up and say I've done a lot of HR work or governance work. FINRA is the only other point I can point to regarding, as I said, regarding fair and free markets. That's the goal of those hearings, is to understand that did someone have their money invested appropriately or not. And then lastly, regarding evaluation of financial managers, of CEOs and CIOs, I can't point to any specific instances that I've had. I'll point to, it's actually funny, I was reading it not that long ago. One of the CFA curriculums is all about evaluating investment managers. And so I would pull on some of the more academic background that I have, and hopefully that would fit as a nice diverse perspective into, there's many of you with practitioner backgrounds in investments, that hopefully that would fit into a nice diversity, I guess, in the arguments or statements and thoughts, and adding that to the group of the board.
Yeah, just to clarify, I wasn't referring to our investment managers. We actually, as a board, only review the CEO and CIO of the pension plan itself. So that's two individuals.
Okay.
Who are with us today. And the final question is, what in general do you see as the risks and opportunities of the retirement system, of the retirement plan?
I don't think it's a new story or a new statement to the San Jose Pension Fund, as most any funds in the US. That research shows that most are considered underfunded based on how they measure metrics and the potential outflows that are given to the beneficiaries. So that's always a challenge. I don't see that challenge going away. I think that the due diligence and the effort put forth by the board to advise asset allocation becomes very important in that discussion. And as was stated, the time and effort that we put in as individuals to bring different perspectives and as a group find what we believe is the best movement forward is immensely important, and one of the major reasons I'd like to be here. So I'd say that's the biggest challenge. The opportunities are, as they always are. I believe that, we don't chase the idea of fads. We try to find, I guess, Warren Buffett style. I mean, you're trying to invest in as quality of investments as possible that maximize return and reduce risk as best as possible, which includes a big analysis of diversification of the portfolio across asset classes, again, being a major proponent of these board's decisions. So I think the opportunity there is just to bring another perspective from my statistics and academic background, and asking questions and trying to let us just find the best answer we can come up with. And that's, in terms of fiduciary duty, that's all we really can do.
Okay, thank you. Let's hold any further questions until we have the rapid fire open round session when all the applicants are here. So with that, let's bring in the next.
Do you want to let him ask any questions?
I think we could also do that when we get to the second portion of the panel. So, Mr. Faulkner, if you want to stay with us, we're going to interview the other candidates. You can remain online, and then we're going to have some follow-up questions and also an opportunity for you to ask us any questions at that time.
Having a candidate hear the other candidates' responses. If he's gonna remain online.
No, because we already asked the questions, we can ask the same question of the candidates, and that's what we have been away, so now he's already answered those questions.
So he's gonna go back in the waiting room, right?
No, he's gonna stay,
Yeah,
once you have a candidate answering
Yeah.
the questions for everyone.
Okay.
once they answer the core questions,
Yeah.
the four core questions, then we're having a more relaxed and open flowing discussion as we normally do for most issues. So,
Okay.
if that's okay.
It's okay with me, Chair.
Okay, good. I don't want to have to take that plaque back.
Who would you like to have, Mr. Douglas, Audrey, Vogel?
The alphabetical order, so we'll ask
Douglas,
Mr.
yes.
Andre next.
Yeah, thank you.
Okay, thank you, Mr. Andre, for applying.
Thank
And we appreciate your interest in serving. It's both a challenge and a privilege. So what we intend to do is ask 4 questions that we've asked of all the candidates. And after that, ask you to remain behind. We'll question the final candidates. And then we'll open the floor to all the trustees to ask any follow-up questions or additional clarifications, and also hear any questions that you may have of us. So I'm going to ask the 4 questions. The first is, if you want to give a brief introduction to yourself, and in the course of that, answer what talents do you believe you're bringing to the board if you were to serve?
Certainly, thank you, Spencer. Here's where we are. I am a native of San Jose, and I've been interested in serving in a public capacity in San Jose. And when I heard about this particular role, I thought it was perfect for me, given my background. I am basically, my experience has been in high tech. I am currently a head of operations at a software startup. And so when discussions of venture capital come up, I've lived it on both sides. And then also, I'm also a registered investment advisor. This discussion of asset allocation was very interesting to me because I go through this with my clients. And I tend to look at things at a 3 to 5 year horizon. However, the difference in my particular world is my clients evaluate me every quarter. And so I know what the effect is of real world returns on people. In terms of education, I have an undergrad in what's called information science, which is now data science at Santa Clara, MBA, and graduate study at the London School of Economics. And so I'm very well educated in the area of finance and economics. I also, this board also is involved in medical plans. I was in charge of administering a medical plan at a company for many years. And so I know the real world considerations of cost and benefits. I've also had, basically, shall we say, employee feedback about plans. And in fact, in my current role as the head of operations at the startup, I am involved in setting up our medical plan as we ramp up employees. I also have, the board is also a consensus organization. I have experience in working in international organizations where you had to get consensus among Europeans and other Asians and American members. So if you think, building a consensus in this environment is difficult, try that. So I bring these talents, both technical talents, experiential talents and soft skills to this particular role. And like I said, this is my chance to get back to my city. And that concludes my answer to this question.
Okay, thank you. Second question is, are you aware of and are you prepared for the time commitment that board service requires?
Yes, I am. In fact, I've had that conversation with my CEO. And he says, this is really interesting. He really wants me to do this particular job. So he said, if you need to take all the time you need to participate in this role, he thinks it's very important that our company be involved in public service to the communities that we operate in. And by the way, we are headquartered in San Jose.
A lot of what we do is not necessarily finance related. It is actually human resource related. We have hearings for disability claims. We review the performance of our CEO and CIO annually. And ultimately, we have the responsibility to recruit, hire, and or fire the CEO and CIO. So what experience do you have in either sitting on boards of judgment or performing performance reviews or any other HR type issues, either formal or informal?
Glad you asked that. At the company that I worked at, for 7 years, which for anybody who's really curious is the Semiconductor Industry Association, I was the human resources department. And so I was involved if an employee did make in the few cases where we had employees make disability claims or workman's comp claims, I was the one who handled that for the company. I have also set up the performance review system at that company, and I'm currently doing that in my new company. To the extent once we bring on members other than the core team, we will have a formal review process every year. And also, I've been involved in hiring and unfortunately, in one case, having to fire an individual over my direct reports over the years. And so in terms of hiring at the executive level, I have been involved in that in my current role. In terms of hiring, shall we say, senior revenue officer, or in old day parlance, vice president of sales. Any further clarification needed?
I've got a quick question.
Okay.
I have a former colleague here, Jay Kwan. He used to work for me. I was at UML, and he could vouch for me when I say that I have fired more than one person in my career. And so this sort of jumps out at me. You've only had to fire one person. Is it because you don't have any force, or what do you sort of say led to such a success rate in retention, or are you just kind of soft?
Well, anyway, I've had, let's say, over the years, probably about 50 employees work for me directly. So I think I have a fairly good success rate. I put a lot on performance improvement plans, and they left on their own.
Okay. That's yeah, it's just.
In that case, my success ratio probably goes down somewhat.
Yeah, no, I think that when we're looking at especially disability claims,
Yeah.
sometimes you really have, it's a tough job. And you have to be able to really evaluate.
Yeah, the disability ones, there's more than one. I mean, I don't really want to go into.
Sure, no, that's fine. That just sort of jumped out at me.
Yeah. I try to be a good manager, and I've been I think a good one.
Okay. And then finally, what do you see are the risks and opportunities that the pension plan is facing?
Well, I was very interested in your discussion of asset allocation. And it's a question because of my particular role as a registered investment advisor that I'm dealing with today. The discussion of emerging markets is a very important one. Potentially, the emerging markets are a very attractive area for investment because those countries are growing very quickly. But at the same time, there's a lot of, systematic risk in those countries. One thing is that I personally don't think I would have the expertise per se to invest in those markets. One of the things that you would have to do a good job of that is having people that with really specific country knowledge. Like, for example, China came up. You have what I consider political risk, but there's another issue in China, having worked as in accounting, is that I do not trust the accounting standards in China to some extent. There's been a lot of accounting issues. So when you look at these emerging markets, you have to look both at political risk, systemic risk, and stuff like accounting risk. And also, like, for example, in the venture capital area, it has been historically a really good area to be in. But we've had a reset, it was just announced yesterday, for 3 quarters in a row, the venture capital area has had negative rates of return. So going forward, having talked to venture capitalists, is that the area is that some of them can't find really good deals at this point. There aren't necessarily that many viable startups to invest in. The AI is being hyped right now. That's working to my company's advantage. However, it's once again, so too many dollars chasing too few good opportunities. So venture capital is a really good investment, but to invest in venture capital limited partnerships, you really have to evaluate the performance of the people involved over time. You just can't invest in that particular class of investments and expect a good rate of return. Another one is commercial real estate. In a lot of markets, except for, Class A buildings, some of the stuff that's going to be selling on 50% on the dollar of their 2019 valuations. So once again, investing in commercial real estate, a real careful analysis needs to be done by the professional managers of the pension fund is turned as a composition of those particular companies' portfolios. And the irony is, in terms of looking at investment classes, one of the best areas that I saw in my clients' portfolios last year were I bonds. I bonds almost outperformed everything. So anyway, you can have a 3 to 5 year investment horizon, but you really have to be careful as what I consider, like in the commercial office real estate market, you can have a black swan event like COVID. Further question?
That concludes this portion of the interview. So we'd like to ask you to stay. We're going to call in the other candidate, and then we're going to have a round robin of additional questions and clarifications. So thank you, Mr. Andre. So bring in Mr. Vogel.
You can stay with the audience if you want.
You can stay in the room.
If you
okay.
prefer, yes.
Okay, great.
All right, thank you for coming, Mr. Vogel, and thank you so much for applying. We need qualified applicants for the board, and we'll appreciate your stepping forward and putting your name forward. So we're going to ask 4 questions of you here that we're asking all the other applicants. And then we're going to open the floor to all the trustees to ask additional follow-up questions and allow you to ask questions as well of us. So the first question is, if you'd like to introduce yourself, and by way of that, tell us what talents you believe you would be bringing to the board as a trustee.
Thank you very much for having me. And good morning to everybody. My name is Julian Vogel. I am a professor at, I'm a finance professor at San Jose State University. And I am bringing a wealth of expertise and academic knowledge to the Board of Trustees. I have a Bachelor of Science in Business Administration and Economics that was focused on management, marketing, and innovation. I have a Master of Science in Business Administration that is also focused on management and marketing. And I have a Master of Business Administration that was a holistic degree, and I also have a PhD in business administration with a concentration in finance and a lot of experience, exposure to accounting and economics. So overall, through my education, I have a very, very holistic experience in all kinds of different business disciplines, which enables me to see the effects of financial decisions on other parts of the economy of businesses, of the ripple effects, right? Additionally, personally, I have a immigration and refugee background, which helps me to identify to understand certain problems of the diverse community of San Jose, and as a subset of that, the diverse community or the diverse pool of beneficiaries of the pension beneficiaries. Additionally, through my employment as a professor, I'm intimately familiar with all the intricacies of the financial system. I teach students regularly about a variation of this financial system of financial how asset pricing works. So all aspects of the financial system and all aspects of finance. I also within that role, I perform research in a lot of fields of finance. For example, I perform research on asset pricing, information asymmetry, on ESG factors, on things. I also have been having, as a San Jose State University employee, I'm a public employee, so I'm familiar with additional requirements that there's with regards to behaviors or ethics, and by virtue of still being employed, I've also proven that I'm able to adhere to these policies and understand these policies. And yes, I've also, through my research, I had a number through employing various teaching and research assistants. And through receiving various grants, I am familiar with the reporting responsibilities that come with this. I am familiar with the additional, for lack of a better term, hoops that you sometimes have to jump through. Yes, furthermore, this would very well be San Jose State, San Jose Pension Board of Trustees would very well align with my responsibilities, as part of my responsibility as professor, or is outreach with the community or engagement with the community. And as you can see, I'm here, right? I do have the time to be available for this position. I do live in San Jose, absolutely. Let's see if there was something I want to say as well. Yes, I've also been, since this is after all a public forum, right? I have also been requested numerous times by various media outlets in the Bay and nationwide to speak on a variety of financial matters. So that is also nothing new. In short, hi.
All right, thank you. And that does lead into the next question, which is, are you aware and are you prepared to commit to the time required to be an effective board member?
Yes, absolutely.
Okay. A lot of what we do is actually not necessarily finance related. We sit as a board to judge disability claims. We evaluate our executive staff, the CEO and CIO, on an annual basis, and we ultimately have the authority to recruit, hire, and fire the CEO and CIO. So can you speak to what experience you may have with human resource issues either in a formal or informal manner, evaluating people, evaluating claims, evaluating staff.
Absolutely. So like I said, my bachelor's had a focus on management, marketing, and innovation, but obviously also management, as did my master's of science, which also had a focus on management. I'm very familiar with the education on human resources. This will never completely leave my purview. So for that reason, I keep somewhat up to date, which is facilitated by the fact that my wife is actually a university professor in human resources and organizational behavior. So I can't help but stay up to date. Absolutely. Additionally, like I said, first of all, I am an employee, which also gives me some kind of exposure to HR matters. I am also an employer to various research and teaching assistants, especially with regards to disability. I am leading the faculty learning community at the university level of San José State about disability justice, and we created a number of resources that was commended by the university and is potentially piloted throughout the whole CSU system in the future. This was also in collaboration with students. Yes. Yeah.
Okay, thank you. And then finally, what do you see as the key risks and opportunities facing our pension plan?
Absolutely. So right now, I mean, I've heard the discussion this morning, so I know that we mostly agree on this, right? But obviously, the greatest opportunity right now is the increase in interest rates, which might potentially be exacerbated by a potential looming default, which might not necessarily even have to be a default. Getting close enough to a default is just as bad, as since the markets react not necessarily to the actual default, but to the close enough perception for probable enough possibility of a default. Then, as you mentioned this morning, the slide or the overexposure in terms of comfort to China. I've noticed that several high-profile investors have liquidated their positions in semiconductors and in Taiwan at large. I've also noticed that several members of the United States Armed Services Committee have liquidated positions in Taiwanese companies, Taiwanese manufacturing. That, coupled with the declared public policy stance of the United States that in case of an invasion of Taiwan, the primary goal would be to destroy factories located in Taiwan, and the secondary goal would be to extract human and other knowledge from Taiwan. I believe that we are edging closer, and I know this sounds very dramatic, but it's not a political stance at all. It's just an observation of public information. I do believe that we are definitely edging closer to a potential escalation of an armed conflict on the Chinese-Taiwanese border, which of course, as Taiwan is important for semiconductors, will have ripple effects throughout the world, throughout our economy as well. Since everybody is having a computer in front of them or joining through Zoom, all of this is possible through semiconductors. So that is potentially a very big risk. And then finally, I already addressed the potential looming default, which might drive up interest rates and also might hit very hard at already very strained housing sector. So that can be a potential field of opportunity, setting aside enough cash resources to then invest in real estate, since the actual substance of real estate does not change. It's just the financing that it will be inherited.
Okay, thank you. So at this point, I wanted to leave all our candidates are here. Mr. Faulkner, are you still online?
Yes, I am here.
Great. So open it up to the trustees if they have any additional questions they would like to ask, and follow-up questions, whatever is on your mind. Trustee Chandra, please go ahead.
I'd be happy to go first. Thank you all for applying and taking the time and effort to be here. This is a big role. I think I'm the most senior serving member of this board, and I chair the investment committee. It's a question I'd like to ask all three of you. Your approach in your interviews was understandable because I think I took the exact same approach. But now I have 5 years of experience, and I'd really like to better understand your view of governance versus micromanaging, being a little too tactical. A lot of the answers that I heard when it came to our opportunities were really hyper specific on investment opportunities. And I think adding that, contributing those points of view to our discussions is valuable. But we do have a CIO, we do have an investment staff, we do have a consultant who do this for a living as practitioners. And we rely heavily on them as opposed to being CIOs, investment officers, and consultants ourselves. So I'd like to understand the tension between those two and how the three of you view the role of the trustee in navigating that tension. And trustee Chair Horowitz, I'll let you decide who answers the question first.
It's for all three. Right. Well, let's invite Mr. Faulkner first to answer.
Yeah, Anurag, could you clarify real quick again the tension discussion you're having, or you just want a discussion on governance? I don't know if I caught the link exactly.
Sure, I'm happy to clarify. In each of the answers that I heard, there were a lot of hyper-specific sort of personal points of view on investment opportunities right now. I would call those tactical. And as I stated, I think it's important for everyone to contribute their points of view as an input to what the CIO and the staff and the consultants also provide. But our role here is not to select managers. Our role here is not to make investment decisions. Our role is more of a governance role. So I'd like to understand your understanding of the difference between the two and the tension between them.
Okay, yeah, thank you. So I guess from thinking to the responses of investment decisions versus governance, I mean, the latter is to follow up with our major goal, which is to make sure that the beneficiaries get paid in full and on time for life. I think that's in terms of the finance side of this committee and overseeing a pension fund, that is the major goal. So as a governance entity, a monitoring or advising board, those two roles play in. One, we need to monitor those that are managing the money in some capacity, meaning the CEO, CIO, who then monitor and work with their investment teams. And then secondly, advising them, which is really probably where the asset allocation sits, here is what we're recommending to be done. And that's what we want to see happen. The last part I'd say governance wise would be that we need to always be active in our knowledge. And I think maybe that points to some of the answers that were hyper specific or trying to showcase our knowledge and interest in financial markets, capital markets, and investments, because it's hard to govern a body or a team that's managing $3 billion without having any insight into how the management could go. So I guess the tension there would be utilizing our three of us that are here, the interest that we have in financial markets as our kind of motivator to keep aware of what the team is doing. And that's for, again, the part of the board that works solely with the pension, not really discussing the ideas of the disability hearings and the other aspects of the board. Thank you.
Same questions, Mr. Andre.
Okay. Thank you. Okay, I have served as a board member of several organizations. And the perspective I have here is one of the most important parts of this in governance action is, and it's an area that's probably fairly dull to most people, but is one that I've actually had to deal with in my career. And my audit committee was CFOs of Fortune 500 semiconductor companies. And that is the function of audit. one of the most important things of this particular body is to audit the operations of the pension fund. That is one of the most, and this is where a lot of corporations today get into trouble. The boards do not take an active area in the audit. Now, in terms of what, in terms, we all are very interested in investments. Where we are here is that I look at the role of this particular body as coming up with the asset allocation. And to the extent every year or every quarter, I don't know particularly the frequency, is to look at the performance of, the fund within that asset allocation. And if there's a significant deviation from the benchmarks used for those asset classes, that's the time for the board to start asking questions. But if there's just minor things, the board should not be involved in those sorts of decisions. I do not think the governance of this would be involved in any way affecting particular asset managers unless, there's some what I consider these black swan events where there's significant deviations. And the idea is that, like in a case of a homeowners association, you pick a good management company and let them do their job. And then if there's really something that happens, then you get involved. But as long as they're performing to that, the governance of this organization would be of just being advisory. And then in the case of an audit committee, that is where you would get is an important part of maintaining the reputation and integrity of the organization.
And Mr. Vogel?
I agree generally with everything that was said before. I understand the role of the pension board trustees, similar to the role of any board, which is to supervise and to advise. And so obviously there is no involvement in the day-to-day in the operational or tactical management of the funds. However, I understand also that to be an effective supervisor and also advisor, it is important to keep up to date, not necessarily to, always dictate what's happening, but to just be able to understand what the managers are talking about. And then also, you mentioned this morning, the example of the 2020 shift. That was relatively swift. If you are keeping up to date, then you are much more flexible to make insert very spare or scarce once in a, not necessarily once in a lifetime, but outstanding times that you can make decisions more quickly, obviously in collaboration with the experts. But yeah, like I said, so basically supervision and advice into both. You have to keep up to date without actually micromanaging it.
I want to thank them for their answers. I mean, as I said, when I interviewed, I think I came in with probably a similar set of answers, tailored more to my own proclivities. And there are many boards still in our state and across the country where trustees are far too involved. And we've done a really nice job of creating a set of processes here on governance, investment policy, strategic asset allocation, meant to institutionalize the program so it outlives the personal opinions of trustees. So I appreciate the answers. I wanted to make sure that it got covered in this forum.
If I may, I also would like to congratulate on the outstanding searching ratio.
Finally, someone appreciates that.
I'm glad you got the validation. So that's what you're seeking, Trustee Chandra.
Doesn't happen at home.
I feel your pain. Are there any other questions from trustees that they would like to address to any of the applicants? Or all of the applicants? Any questions from any other members of the public or those who are here? Council?
Yes, I have actually one question. I know we have 4 candidates and I was just wondering what was for the 4th candidate, you had mentioned that there was a statement that the candidate had that they wanted to share. Is that right, Mr. Pena?
That is correct. Well, not so much a statement. We have as an attachment his application, which we have from all 4. Does he have a separate statement that he submitted? No.
No, I think the statement is such that he wants to be considered. He's hoping that the application itself provides enough background information for the trustees. He apologized, he couldn't be here this morning because of prior commitments, but he still wanted his application to be considered by your board.
Okay, and with that, just out of full due diligence on the process, I do want to open it up for the forum for the board to discuss his application as well. Just for full due diligence on that. Thank you.
So I guess if there are no further questions, we're at the point of deliberation. Is this something we can do in closed session?
No.
No,
No. No wiggle room on that.
no.
Okay,
No room.
so as with our own deliberations on the CEO and CIO, it is done in public. It is something that is a little bit uncomfortable for the board, but it is something that we have to do. I believe all the applicants are extremely qualified and we appreciate their application.
Mr. Chairman,
Yeah.
I'm sorry to interrupt, but
Sure.
we go through this process as well when we do respond to RFPs for council, and there's kind of been a courtesy that's developed among candidates in a situation like this with a public board that has to deliberate in public, that we ask the candidates or the boards ask us if we would be willing to excuse ourselves from the room while the board deliberates. And that would be going in a waiting room if you're on Zoom and basically excusing yourself from the room.
I see. So a
To make
voluntary
it
closed section.
to assist the board's candor, which, works in favor of the entire system and the plan and the plan's members. So I would respectfully offer that as an option to propose to the candidates that they excuse themselves just simply as a matter of professional courtesy.
Okay. Well, thank you for offering that option. So in fact, I would like to ask if the candidates would consider moving back into sequestration so that we could discuss in full candor the applications. And then we have the means of doing that with our online applicants.
Yeah, if you can let him know that he's gonna be removing to the
If I
Thank
actually
you
have
for
a question,
understanding.
process question.
Yes.
So in the last email that we received, it was stated that, on deliberation, we would receive an email. So that's not the case anymore, where now is deliberation and then we'll know.
We'll have the deliberation here when you're sitting over there, and then we'll bring you back in and let you know what the decision of the board is.
In fact, before we do that, I did mention that we would offer the applicants an opportunity to ask questions.
Yes.
And let me just say, the process, we will deliberate and we will vote here today now on which applicant we will forward to city council. And it's my understanding that city council will put this on the consent calendar. So it is, let's say, not 100% guaranteed, but extremely likely that whoever is forwarded today will ultimately be our new trustee. And so that's the process. So in fact, do any of the candidates have a question that they would like to ask us?
I just had a minor technical question.
Okay.
In the auditor's report, it said that, gains and losses are smoothed over 5 years. And in the 2020 report, it looked like that's no longer the case. I just wanted to understand. Is that still?
I'm not sure what particular finding you're referring to, but we do go through an actuary evaluation on the annual basis from an actuary, and gain and losses are in fact amortized or not amortized. They're smoothed out over 5 years.
Okay.
And that's to limit the volatility of contribution by the employer, given the peaks and valleys of the returns over time.
Okay, all right. Thank you very much.
I have one question, if I may, back to one of the interview questions that we had regarding time commitment. I kind of two questions. One is, it doesn't have to be every trustee, but maybe somebody wants to volunteer their insight on what is your time commitment, because there's no guidelines on what that time commitment is. And the second thing would be, for any trustee, what are the things you enjoy most about working on the board?
I'll speak up.
Okay, I think Vice Chair Jennings would take a first crack at that.
Okay, so Matthew, I am an employee for the city of San Jose. In October, I'll have 21 years in working for the city of San Jose, and my background previously was in Silicon Valley. Many years there, master's, bachelor's in economics. So I would say it depends on how many committees you're on. If you're on, and right now, because we have a couple, I have one vacancy, which just got filled. We're maybe on a few more than we would normally be on. So those committees then require you to read what's going forward there. I'm also vice chair, so there's a little bit more involved. I do not spend 10 hours a week, I wouldn't say. The only time maybe where I do spend that amount of time or a little bit more is every third Thursday of the month, because that's when we have our board meetings and then there's committee meetings after that. So I wouldn't say I wouldn't think I spend that much, to be honest. I would say, my background was not really investment. It's budget, it's finance, it's administration. So I bring that strength as well as a view of what it is to be a city employee and what it is to know that this money will pay your pension, right? So what I have enjoyed most is the learning opportunity that I have received in learning what it is, understanding the impact that the board has, what the pension is made up of, what is involved in providing this to city employees. And that's part of the reason I wanted to do it, because it was going to pay out to me. And I was, being an economist of sorts, it's like, I like to know. So I found that, but I will say, and I found this really important as I learned, when you walk in with preconceived notions, you find that's not true. It's a very different world. It is not the world of your education. It is not the world of your current investments. And so Trustee Chandra, I think, explained that quite well. And I think keeping an open mind is going to benefit any new trustee.
Thank you very much.
Did another trustee care to?
I'm willing to take a stab. I always really like Julie's answer. And I do feel like I've learned and I've grown a lot. You should expect to serve on 2 committees. It could be more. And then there are the board meetings. So just to give you more quantitative answer, I feel like when I first joined the board, we had a lot of stuff around the overpayment of pensions. So it was like 10 hours of reading to be prepared for a board meeting. I feel like both in the fact that I understand the issues better and having less of that, the litigious matters, it's been down to 5. I don't think there are any committees left that meet on a monthly basis. I know JPC is right now. But that's usually bi-monthly or quarterly, and another 5 hours of reading for that. So, I mean, that's essentially the time commitment. I do personally spend time outside of that talking to the CIO and the staff, since I chair the investment committee. What I've enjoyed the most is the people. There's been a fair amount of turnover on this board since I joined, and the board was terrific when I was here. It was great. I learned from some real pros. But every time we bring in new people, the collaborative spirit, that open-mindedness that Julie referred to, continues to persist. There's a lot of consensus, but we also disagree. I think we do it in an amicable way. And just as a personal plug, my father-in-law took over the electricians union as treasurer at one point in his career, had no finance background whatsoever, and dealt with a supremely underfunded plan, taught himself asset management, hired consultants. He fast forward to his 50th wedding anniversary with my mother-in-law. these big rough union guys were slapping my sons on the back saying we wouldn't have a pension today if it wasn't for your grandfather. So that's sort of been my motivation to take some of the experience that I have in private markets for the last 25 years and see if I can help apply that. And I came in with a bit of a practitioner's approach as well. And then there's a delicate balance between bringing that skill set, but also understanding, as Julie said, that the issues are really different here than they would be in any of your finance classrooms or being a CFO or being a venture capitalist. It's really interesting. You get a much more expansive understanding of what the issues are in a pension plan.
Yeah, I would just like to add on the time commitment piece, like with for instance, it's been more than a year for me. And there was a lot of time commitment in the beginning to understand the issues. And then when you join the committee, like for instance, disability committee, there is a lot of material in there. So, you know, it takes time to get trained on those issues, but then with time, as you get more, as you get into the reality.
Yeah, I would concur with that. It's gonna vary depending on what committees you're on. It's gonna vary depending on what's going on with that particular committee. There's a huge backlog, our disability committee, that we're working through. There's exogenous shocks like COVID. And so I'm gonna suck into what are we gonna do? And having emergency meetings here. But it's what I really enjoy is the people. And there is not always consensus on the board, but what the best course of action is. You don't want to have that, but there's always respect, which is very nice because some of the other pension boards, I keep bringing up San Francisco. But Global Home City San Francisco is not a congenial board from reputation. And that is something that's nice. You know, people from different backgrounds. I've learned from Julie about how the city operates. And you know, it's a good board. It's a good solid board. And I am sad to be leaving. There we go.
Thank
Yeah,
you.
I'll just add my quick metric is our monthly board meetings typically last 3 to 4 hours, sometimes longer. A committee meeting lasts anywhere from 1 to 2 hours. And I usually budget as much time in preparation as they do for the board meeting. So I think that's probably, and obviously more at the beginning as you're drinking out of the fire hose and you get after a year or so a bit more accustomed to what's happening. So that's.
I actually have a question for our candidates that I
Okay.
just thought about. It was a question that sort of was asked of me, is kind of like, you may not be able to be on the investment committee, which is kind of like, I think we all think that maybe we want to be on the investment committee. So my question for each of you quickly is, which committees do you think we'd like to be on?
I mean, can I go?
Sure, please.
All right. I mean, I'd have to look into more detail into the specific committees, but for example, based on my background and my work at SJSU, the disability committee would definitely be something that.
Okay, I have actually already answered this. I would like to be on the audit committee because that's a function that nobody really likes. And I think it's one of the most important things for a pension fund to have.
Can you start today?
Yeah.
And then now.
Thank you, Debbie, for the question. I don't know if I have a preference because I don't think I know enough about what the committees would entail to answer it. So I've always been one that I takes whatever's open and I'll make it happen kind of idea.
Great. Yeah, the IC tends to be the most oversubscribed of the committees. So, but all the committees play a role. And not all are equally active. And it also varies over time. So, any other questions from the applicants? Any other questions from the public or staff or trustees? So with that, let us move into the deliberation phase. We can ask our applicants to excuse themselves. We appreciate that. And the discussion will begin shortly.
And we need to have Matt.
He's not going in a breakout.
Yeah, they're gonna put in the breakout.
How do we properly, Council Chin, account for our absent applicant?
Sure, we can't ask him the same questions, obviously, but what we could do is go through his application and highlight any, pros and cons that we see from his experience. He has a pretty detailed application. And we can have that as a part of our deliberations. We can, first start with the pros, go around round robin, and then do cons round robin as well. And if you need a minute, and maybe now's a good time to take a break for the trustees. to
Sure, let's
look.
take 2-minute break then. You guys, let us know.
Okay.
Just on the break. Okay, 3-minute break. The board's abandoning me, so I guess it's 5-minute break. We have a break. Abandoned board. We're a 5-minute break here.
Is there a way could be added to a breakout room?
Yeah, I know, they're working on it. Thank you.
Thank you
Perfect,
for
thank you.
bearing with us, Mr. Faulkner.
Yes.
Thank you.
Technical issues are always, is yet another challenge with the board service. Right. Yeah, that's the most popular part of the meeting.
Oh, my goodness, unanimous.
Early.
I thought it was nothing if you. Only 20 minutes. Nice to meet you. Yeah. In person. So maybe.
Matthew? Oh, he went in there. Oh, he's in. Yeah, he's in
It's
there.
got you.
No, Abbott's already been appointed. Yeah, no, this is
Oh,
the final seat. This is,
I see, okay.
there's only one seat that we actually. Deliberate on. Yeah, which is probably the original memo that the city council that explained it to them.
I got it. I saw Jeff Rieger and he said he wanted me to send him regards.
Where is it? You do Santa Vida meetings? Oh, so I used to, my prior experience was to Sacramento, so I used to work there, make it to Kirk County. So I used to go to Sacramento, and I missed it. How is he doing? Is he enjoying the change?
Yeah, I love.
It's a lot less. Sure. I mean, unless they have a lot of issues. Yeah. I remember he, when he started, many years ago in Fresno. Yeah, oh, yeah, no, we had a good time.
How are you?
Yeah. Yeah, it was actually weird, the TV, they, I mean, I was like, my first experience and we had no, I started in Kirk. But when I was in Fresno, like, just sure, so we had the meeting, they were that. But he was description of the boy apartments.
Oh, I didn't know that.
Oh, and then we went on TV and also asked for the board.
He told me about the other one where.
That's exactly right, because they were not authorized. And I tried to think about one part of the job I actually, what they asked. I was trying to answer that, I was like doing, and it was funny, I would meet people, and then, when they asked what I did.
Recording stopped.
I'm not very sure. Oops. If they find out who I was, They will start talking about it. They were. It was a funny one. I'm gonna tell you is that he was just speaking a lot more than I was.
You know.
You were training, you was speaking a lot.
Yeah.
Who's speaking? Jeff Rieger.
Were you on the board?
No, he was.
Yeah, he's very active.
He was a former attorney.
Yeah.
He used to work with with them before. He actually now. Yeah.
So he's like your friend.
He's.
He was. He's now with Alameda County.
Yeah.
There he said he was.
Yes.
Yes.
Very talkative.
Yes.
Or he's saying something.
Yes.
Yes. The bell curve distribution skewed to the right.
That is absolutely right. That is absolutely right. And hopefully if he's listening now to the discussion, Jeff, we love you. You do so much.
Just want to deal with someone because he, during the.
Yes.
Okay. You know.
Jeff Rieger?
Oh, I just saw the packet.
Oh, yeah.
Are we all back?
Ah,
No, it is. I've been thinking tea and thinking that's not. But and I realized no. I'm talking very professional. Just kind of like,
I grew up drinking coffee since I was 5 years old. I think I'm already. I just broke a 9.
Oh, I know why I come up with it. So it was about 2 or 3 in the afternoon. So
Yeah.
I should do it.
No, even with tea, like 2 p.m. black tea.
Yeah. I actually.
Yeah, unfortunately, it's in here.
Oh, you've been sitting here.
I know Matthew and Julie. Hello. We're in the same department. So I've been in meetings with them, but I've not worked with them, so.
Yeah.
Well, you want to.
Hi.
Mine is brown.
You came in the right part. Yeah. Everybody.
Absolutely. I was yeah. This is where I'm gonna step. Mostly, so I had that combination. So, and it was really interesting. He said, don't fight with this, because of the brown. And then Brown and I looked it up, that's why. Yeah.
If we can return for deliberation.
So that's all.
That is going to be excellent.
Yeah. I saw you.
So trustees, if we can reconvene.
Recording in progress.
Thank you. So our applicants are sequestered for the moment. And
I think the door's open, we should probably.
oh, is that right?
Close the door.
So while Harvey and Maytack are here, I wanted to say for the record that I personally have had communication with all 3 of the applicants who are here today, either to answer their questions or to encourage them to apply. So if you feel I need to recuse myself from the vote.
Only if you promise them something.
I did not. I feel the need to make it public that I had these communications and to make that, put that on the record. Okay, so
That's fine.
okay, fair enough.
No.
So I guess a couple of thoughts how to proceed. One option is we discuss it and then someone makes a motion for a particular candidate and a second, then we vote on it. Or is it possible that we simply vote and to see who supports Would you candidate? And if that's not the case, narrow it down.
Shouldn't we discuss, John?
I was about to say.
Well, I wanted to get to that. I just wanted to talk a little bit about the process, how we can do this. Can we have a vote at the end of the deliberation, or we need to do a motion and a second?
To do the recommendation to council?
No. In
You're
other
gonna
words,
have a.
how shall we as trustees arrive at a?
So you're gonna you'll have a generalized conversation.
Mhm.
Your assessment of each of the candidates, whatever you wish to say about that. After which, there's a lot of different ways you could do it. You
Okay.
could rank them and,
Hmm.
go 1, 2, 3, 4, and
Okay,
where do we rank them and see if there's a consensus that way before you actually vote.
okay,
Ultimately, though, I think you should conduct a vote. And the vote would be on a motion to recommend to the city council that they
specific individual.
approve this specific individual, and that would come at the end, but
Okay.
the conversation may lead you to a conclusion anyway. If
Okay.
that works for you, if that works for everybody.
You had some thoughts on the candidate who is not here, Mr. Cleveland.
Yeah, so I think that in many ways, very, very attractive. The Chief Human Resources Officer at Seagate Technology, which is a real job. He's managing retirement funds, so he understands what we do. My only strike against him, this is just sort of a personal issue, is that he misspelled technology in Seagate Technology. And so, it's just- Okay.
Oh, and also he was unable to find the document. What was it? The audit. So
Yeah.
first of all, Roberto, there is a problem with that document. I don't know if that's a city or if it's ORS, might be the city site. But everybody said there was a break in that hyperlink to get to that audit. But I think out of the 4 candidates, 2 or 3, I think 2 of them were able to locate it by being industrious and persevering. So just, I mean, is that a big deal? Probably not.
I want to thank trustee Keller for putting the misspelling on the public record, because I'm trying to get I want my son's resumes to be a little better than they are.
There's a yes in there.
Yeah, so I'm gonna take that home with me. I think one important thing to point out about, John Cleveland's, application is the experience he has in HR, and we've even stressed in our comments here, the importance of understanding a lot of the employment-related issues, the disability-related issues. And it seems like his stewardship of the retirement plans somewhat is analogous somewhat to the type of role that we play. So I wanted to make sure that we highlighted that. I think it's hard to fully understand his candidacy since he didn't interview, but that did jump out at me in his application.
Yeah, and I should say, Mr. Chair, that I had recruited Mr. Cleveland because in my conversations with our CEO, the issue of getting an HR professional. So I went out and did some recruitment, and a friend of mine worked for Mr. Cleveland at Seagate, and she said he was interested, so I encouraged him to apply. I'm disappointed he wasn't able to participate in the interview today, but I did encourage him because of the HR background and so on that was referred to. But I'll let him know to check his spelling.
But not able to participate in the interview, and just wondering if this like a time commitment issue?
Yes, he was already had a commitment prior to the meeting for today, so he couldn't.
They already have one of the questions this time.
She means broader then.
Oh, I see, I'm sorry.
I'm wondering.
Gave him the schedule. As soon as I learned the schedule, I gave him the schedule of when the interviews are going to be. Council and this one.
Right.
I will
Trustee
say
Abbott.
this, and because I was interviewed at the same time that he was by the city council, I was impressed with what he had to say from a human resources perspective. I thought he didn't have a very deep grasp on financial expertise, some of the things that he might have talked about that, but if this is the need that the board has, he might be a very good candidate for the board, because he brings an expertise that I think that none of the other candidates, including myself, have. So that would be just sort of my comment.
Ms. Davis?
Thank you. I agree with trustee Abbott. He did come to the council for an interview and he did very well. And I kind of listened with an ear to, I had heard that issue that there had been, a desire to have someone with an HR background. And I thought he would definitely be able to fulfill that role. So I just, for the board's consideration, obviously I'm not a voting member here, but he did very well in the interviews. I would say I agree with trustee Abbott. I think there's a little bit of learning there. I mean, my degrees in economics and my master's was in public policy, and it took me a year to figure out what Makita was talking about. So
Join the club.
So I think there's some learning for pretty much everybody there. But at the same time, I would say, I think this is a replacement for trustee Kelleher, if I'm correct. So you may also want to take that into account if you feel the board is unbalanced now. The reason that I made the motion for trustee Abbott, just in the interest of discussion, was because we hadn't had an academic on the board, and we did have 3 applicants who were academics. And so I thought that, hearing that we wanted to diversify the perspectives on the board, that would be another possible way to go. And I had kind of hoped that Mr. Cleveland would be here, and I knew that because I wanted you all to be able to kick the tires on the HR side, knowing more about what you all do in closed session than I do. So that was why I didn't make the motion for him, just to be clear. But it is definitely an issue not having been able to do those interviews.
My own view on Mr. Cleveland, his background is very admirable. He's a very interesting and diverse background, diverse to what we all have on the board. However, I'm going to be a little bit harsh and say 90% of life is showing up, and the fact that he's not here when we're asking people to make a time commitment does not argue in his favor.
I know sort of what he's doing. Like if he's
if he's working or is he retired now, or
oh, no, I think
So he's working, we didn't ask, he just, he was, had a conflict, so. I don't think it was our position to find out. Yeah, so, but can I just mention something, if you finish with your comments? Okay, no, I'm just gonna say, obviously this is ultimately up to you. I just, for sake of disclosure, I just wanna say, HR is one of the areas I have mentioned, by no means is the only one. My point is, I'm just, given my experience working with your boards, because obviously besides Federated is Fire, and my other 20-some years working with different boards, I'm always big on diverse background, whether it's HR, whether it's accounting, whether it's actuarial, whether it's education. And I do know that when you have a lot of members with similar backgrounds in investments, I'll be different investment knowledge, right? Venture capital versus others. The discussions take one particular flavor or side, and I'm just more into having some diverse backgrounds so that the collective unit can make better decisions. That's all. So I just wanted to make that point that it's not just HR, but other areas as well. So thank you.
any other comments on any particular candidates, or just general comments on how we should evaluate them?
Well, I wanted to say that I thought Douglas Audrey had a fairly diverse background.
I agree.
Yeah, he's a native of San Jose, high tech. I mean, guaranteed, his management role was 50 employees overall. but but he has touched on a lot of the different management aspect. And, HR issues, disability issues, hiring, et cetera. So, international organization, consensus building. I just, I got that, if we don't have this other gentleman that we didn't get to talk to, but this guy seemed the most diverse from that, is what I picked up.
I'm sort of wondering a little bit about him, given that he's an IRA, he's got personal clients, he's acting executive. And back in sort of reference firing one person in his career. That just really stands out to me as a manager. There's no way you're that successful at hiring 100 people. You just aren't. Because you're gonna have to make mistakes. And maybe I was a bad manager, maybe I was a bad hirer. You gotta be pretty tough.
My concern with him, and I agree that there's a lot of things I really liked about what he had to say about wanting to be on audit, things like that. But he's working for a startup, and people in startups do not have time to be on a board. If it's a success and to have another business.
Well, I mean, I can give you my example. I'm working in a startup, considering community energy, and we have a lot of work, but I'm still serving on the field.
Okay, so I'm mistaken.
So yes and no.
One of the things in applicant Hunter's remarks that concerned me, I do like the diversity of his background. I really like the diversity of applicant Cleveland's background, but obviously we discussed some of the shortcomings of not being able to interview him. Although, I mean, Councilwoman Davis has heard him and Trustee Abbott's heard him. And then I believe Trustee Linder has also spent a little bit of time with him. So maybe we should put a little bit more weight on that. But specifically with applicant Andre, I think this notion, I was taken aback by the notion of a 3 to 5 year time frame and what he does for clients. I remember getting the CIO and staff getting letters from members of the plan saying, my FOIA was up 21% last year. How come you were only up 8? That is a perspective that, just to be candid, really worries me when you're stewarding long-term assets and you're moving a battleship, not moving a speedboat. So that jumped out at me as a concern, and I just wanted to voice that.
Yeah, that struck me as well. Because we were just talking earlier in the meeting that we have a 20, 30-year time horizon. Yeah, very gradual incremental changes, if any at all.
Right.
And the 3 to 5 year, I think it's retail is very different than pension investment. Very.
I want just to build on what you just said. One of the things he said was that his clients have done really well with I-bonds, but I-bonds.
Oh, right.
That you can only have a $10,000 investment.
Yeah.
So, I mean, it felt like it was a left field comment.
Yeah.
It didn't apply to the scope of what's happening, what we have to consider for pensions.
I agree with you on that, because I heard that and I was like, okay, this is like, yeah. I mean, I also like Matthew Faulkner. I thought, he has a broad perspective on things. I mean, guaranteed he doesn't have all the management and stuff. I mean, again, his background is education. But he seemed open to new ideas. He didn't seem like he was locked into one mindset. I don't know. Trustee Abbott, you know these
So
two
I
people?
worked with Matthew and Julia.
Yeah.
So I have not ever conferred with them on financial matters, but only been in meetings with them. And I will say that I think that Matthew is extremely articulate. And I think that could go a long way towards facilitating conversations within the board.
Is he insightful?
I don't know. Because the meetings I've been in have been like department meetings, so we haven't talked about financial issues, so I'm afraid I don't really have prudential kind of insights.
How about Julian Vogel?
Well, let's keep the focus on Mr. Faulkner for a moment.
Okay.
Did you have something to?
I guess my question would involve both Faulkner and Vogel for trustee Abbott. Is that okay?
Oh, sure.
I mean, it's for everyone, but I wanted to see if she might offer an opinion first. I have to preface this by, I am the son of an academic. My dad's side of the family is full of academics. I thought of pursuing a PhD. I revere higher academia. Having said that, well, I would love to just get your opinion of having another professor on the board of 7.
I think that. I think that they have some analytical skills that might be really useful, but I think it's only if you need more people to be part of the investment committee. I think that if you're looking for people to take a broader role, like I worked in corporations for 30, 40 years, and they've only had academic background. So although Matthew did mention some of the managerial experience he's had, I think that you don't want someone purely academic. It would not give you as big of as broad of a case as you want. I would thought that some of what Matthew said actually about what he's done on FinRun, some of the things he's done with student athletes and so on, actually does give him more of that broader perspective, where I would say that what I heard from Julian probably gives him just academic credentials.
I like the idea of the interim arbitration,
Yeah,
because that stuff can get ugly.
yes.
Mhm.
It's just.
It doesn't it always get ugly? Finance people are good lawyers.
What's FINRA? Can someone, I don't know what that
That's
was.
the licensing agency.
Yeah.
So if you have your Series 7, it's being held through FINRA.
Okay.
Financial,
Investment.
something.
Yeah.
All right.
Well, that's where I get stuck.
Okay, so I'm just gonna summarize. What I hear is we do want to get that diversity. Even though we don't have the other guy, I'm trying to get his name. Cleveland, yeah. Cleveland was high regarded from Councilmember Davis and Trustee Abbott and Trustee Linder. So I think that's something to be said, and he brings that. Probably has a lot more experience and probably has a lot more with firing because Seagate has had a lot of ups and downs. Douglas Audrey, has that background and but yet he was leaning in some, manners. I mean, it's like he's new and I mean, he has to learn. And I mean, you go in there somewhat preconceived notions. And Matthew Faulkner seems to be like the key guys. Am I on the right path here? Does anybody want to say something different?
Well, you're on your path as always.
Okay.
With Mr. Faulkner, when we talk about HR issues and having disability hearings, I was also impressed that he does FINRA arbitration. It's a similar type of sitting in judgment type of situation. And he serves on committees on campus, so he has some experience in the collaborative process. And when we asked about opportunities and risks, he was the first to immediately identify we're underfunded, and that's the challenge with the plan. So as opposed to the other candidates kind of start talking about, which investments they like for this year kind of thing, which I think was kind of where you were going with your question about tactical issues.
Right.
So I think that speaks well. I think he's quite well spoken. And seems to have time available to serve on the board. So that was my view of Mr. Faulkner.
And I agree with that, that it seems like he has time, he has support.
Support maybe is more important here.
And I really do like the idea of John Cleveland getting an HR heavyweight. But I do wonder if he's running a pension plan. As well as being the chief resources officer. When I was being one on, you couldn't even get. Or, I mean, HR, that was awesome.
Yeah, I think if he's currently employed, that's certainly a huge consideration. I mean, I'm retired, I have time to serve, but I think it's a challenge if you're fully employed.
Tell me about it.
He's-
Yeah, we know the challenges our existing trustees face.
Cleveland says he's retired.
He says he's retired?
Yeah.
Okay. Oh, okay.
Check the box, retired.
We didn't talk at length about Mr. Vogel. Any thoughts, comments, insights there?
I feel like he was less prepared, maybe. Less prepared.
No, I would, have to say I agree that seems like it's a very nice guy, very knowledgeable.
Yeah.
But he looks like he's pure academic. I mean,
That's my impression.
you know,
Maybe a little less articulate than the other two candidates.
That's always a tricky one for me. Being well spoken is helpful, but I sometimes think there's a lot of intelligence in people who aren't verbally gifted. That we don't want to miss.
It's probably a very keen observation. So. I know in private industry, we always gave 10 extra IQ points to anybody with an English accent. Whether they deserved it or not. So,
Spanish accent, that's where.
well, you know.
What about Roberto?
You didn't know we got extra points for you, Roberto.
Thank you, thank you. Well, it's first time, but I
Oh,
guess.
no, I have to say I like the Irish accent.
Oh.
Yeah, that does it for me.
All right, steer us back, Chair.
Please. So. Is there anything else anybody would like to say, pro or con?
Yeah. The rule is three. Okay, no, I just got another spelling error. Mr. Cleveland, in my human resource services. Okay, compensation. So I'm gonna just have to say that. That just bothers me too much. I'm a little bit with you that he didn't show up. We don't know why.
Yeah, I'm not offended by spelling errors. I mean, you fill the form out online, it can be a little tricky, but. But as I said, not showing up, I mean, he sounds like an excellent candidate in many ways, but it kind of disqualifies him in my eyes. So. And we
Yeah.
simply didn't have the opportunity to vet him, so.
I would agree with the chair on that.
So the three remaining candidates, would anyone like to form a motion that we might move forward with? Or do we want to simply, everyone indicate who their number one candidate is?
Why don't we do
We
that?
could do that as kind of a ranked choice voting, you
Okay.
know, to say, you know, go through the names and say, is this person number one for anyone, and then say, who's your number two, and
Okay,
You know,
that's a good idea.
if that's
Okay.
useful.
So we'll do it alphabetically for
Can
Mr.
someone
Andre.
keep track of it, though? I mean, I know this. is
Harvey's on it.
recorded. Yeah, cool.
Harvey's on it, I was gonna do it.
Billing?
I'm right.
Sure he's on it.
I don't know, right?
So for Mr. Andre,
So is he number one on anybody's hit?
yes, is Mr. Andre the number one candidate for anybody? Please indicate.
It was on my list. Trustee Linder, he was number one
So
on my.
Mr.
Linder,
Okay, Linda.
okay,
Andre. Mr. Faulkner, was he the number one for anyone?
Me
Yes.
one,
Okay, that's
Oh, wow.
5.
four,
and me.
five, oh.
6, Julie.
I don't know. Can I raise a hand here?
Oh, wait.
Yeah.
No, that was 5. I didn't raise a hand.
I thought.
Did you get, oh, here, I got a raise hand. There you go. See?
Okay.
Who said,
Well done.
who had Mr. Andre as their number? one?
Mr. Linder, trustee
Oh,
Linder.
trustee Linder, okay, so, and 5.
And then
Faulkner, and
Mr. Vogel, well, there's no one left to vote but myself. And I didn't vote.
and Mr. Cleveland, was he anyone's?
Are
number one?
you abstaining from this?
I'm not, but I honestly don't know who. Ambivalence. Ambivalence gets a vote. Mr. Cleveland, does Mr. Cleveland have any votes?
Any number one votes.
Well, it seems like there's already a majority for Mr. Faulkner
Yeah.
based on this straw poll. So would anyone care then to make a motion? That's one of my final.
We asked Mr. Lindner if if Mr. Lindner would put Mr. Faulkner as his number two choice.
Yes.
Oh, we could add, he says yes.
And he says yes. So given that,
Should have a motion.
the motion might be to make it unanimous. Just because the recommendation going to the city council will be stronger if it's a unanimous.
Very
vote.
well.
So Spencer,
If the board would consider that.
I would like to motion that we make a unanimous recommendation to the city council that Matthew Faulkner replace me as trustee.
And is there a second for that motion?
I second.
We have a second from trustee Abbott. All
Discussion.
voting an aye. I guess we have to have a roll call vote. Vice Chair Jennings,
Aye.
trustee Chandra. Aye. Trustee Kelleher. Aye. Trustee Linder.
Aye.
Trustee Avasti.
aye.
Trustee Abbott.
Aye.
And the chair votes aye.
Oh.
Wow. Take the
You're like
the tension.
warrant court to make my two lawyer friends happy.
All right, I guess we will call the applicants back from their sequestration and we will announce the results. Can I delegate that task to the vice chair?
Okay, I thought I saw it.
Oh, we left? Oh,
Yeah, yeah.
okay, all right, well, in any case, if we can bring back Mr. Andre and Mr. Faulkner online.
Vogel still here.
Yes.
Is he available, Mr. Faulkner? Yes, okay. Are you there, Mr. Faulkner?
Yes, I'm here. Thank you.
Very good, thank you. Again, thank you to all the applicants for applying, for submitting yourself to this process. I know you went through 2 rounds of interviews, once with the city council, once with this board. We have deliberated obviously at length, and the board has decided to advance Mr. Faulkner's application to city council for the trusteeship. So thank you again, and appreciate your participation.
Thank you. all
Thank
very
you very much. Thank you for your time.
All right, we'll move on to the next agenda item, which is where. I think we're.
Mr. Faulkner will be in touch with you. We're gonna advance the information to the city council and keep you posted on next steps and everything else. Is that okay? Thank
Okay.
you.
Yeah, thank you very much.
With a view to your participating in our meeting next month.
Correct.
In June and in July.
June 15th.
And July we have off. And then we reconvene in August.
Okay.
Congratulations.
We'll say,
Yes.
we'll say welcome aboard after the official.
Yeah, when it's official, we'll go through the usual hazing process.
I would like to recommend to the 2 new trustees. There's the, Sackers, class coming up in July. It's in I think it's in the training, or did you
Yeah, I think
see
it's under-
Berkeley?
There is at
It's
the high
under
school.
our last agenda item.
Yeah, it's July 19th that week.
Yeah.
Okay.
I would also like to tell both Mr. Faulkner and new trustee Abbott that typically not only does staff do an orientation for new trustees, but as fiduciary council, we do the same. And now that once we have confirmation of Mr. Faulkner's appointment, if we do from the city council, that we'll work with your calendars. And even though the board is dark in July, if it happens to be, we can take advantage of that time and hold our session with both of you. It would be very helpful. And I also
July is a
recommend that.
wonderful month for an academic.
I also recommend the Haas program because Maytak and I are featured speakers.
Then we have to
So of
go.
course, that will definitely be valuable, but that the orientation of the Haas school program with Sackers is on the investment side.
Yeah.
So,
And it's designed for new trustees, so we'll also be covering fiduciary duties, at that time.
And I believe trustee Jennings and I both went through the Sackers training at Berkeley. I recommend it.
It's really quite good, and given both your academic background and your already extensive experience, I think I have found it to be very good. They bring excellent speakers in,
but you have to
including
work
Council Chen, right?
Yes, I'll be there. I
Okay.
wore blue last year.
Yes, yeah.
So on to agenda item 6, we're doing the committee reports, investment committee.
Yeah, I mean, our last meeting was essentially what we discussed here today, so no other reports. Our next meeting will be in June.
Okay, do we need to receive and file minutes?
We do need to receive. Thank
No
you for
vote on that.
Yeah, receive file.
Okay, the governance committee, it looks like the last meeting was a special meeting, so is there any report, Vice Chair Jennings from the governance committee?
No,
Okay,
there is not.
and the audit committee, Mr. Kelleher, trustee Kelleher, our last meeting was February 16th. Our next meeting is this afternoon. Oh, okay. Great. And finally, the disability committee.
Ah.
Was there anything to report there?
We just have the minutes from February 16th. So we just have to receive and file.
Okay, so we received and filed. Joint Personnel Committee, I was not in attendance at the last meeting, so trustee
was there.
Chandra.
Oh,
Yes,
yeah, Chandra.
I guess I am vice chair of that committee.
Yeah, you are. Yeah.
We were throwing to you.
Ashworth did such a good job, for police and fire. So we made some determinations on compensation for CEO, previously CIO, and the staff. They have been moved into a range that is top quartile. I don't have the specific numbers for you of peer plans. And then we also had obviously that will have to come back to the board, both boards for approval. So those will be recommendations coming out of the JPC. And then the JPC continues to work on structuring some form of an incentive compensation program for the CIO and his staff. We're still figuring out the criteria as well as also what the range might look like. And at the very end of that meeting, there was the beginnings of a potential discussion for potentially also including the CEO in incentive compensation.
Okay, but nothing decided
Nothing
specifically.
decided or specifically, so no recommendations yet for either board to consider.
Great. So item number 7, education and training. We just talked about the Berkeley program. I know trustee Chandra recommended this Wharton self-paced course. I know I clicked on that link. It doesn't have a lot of information on the actual content of the course. So
I can see if I can find it. That was where I was at Pension Bridge in San Francisco, and I spoke on a panel, fellow trustees, just talking about trust. It was a breakfast, so it was kind of sort of a horseshoe like this. And two of the staff, Sarah and the Contra Costa County trustee, either on the panel or in attendance, highly recommended that.
Okay, so certainly interested in looking into that. It sounds similar to the Berkeley program.
Perhaps
Covering
a lot of these business schools trying to make money off these kinds of executive things.
Yeah, exactly. Any proposed agenda items? I think next time amongst whatever else we discuss, we need to revisit the committee assignments.
Yes.
Yes. And if there are no other public comment and no other agenda items, this meeting is adjourned.